Assalamu alaikum friends, welcome to lecture 4 of AAA. This lecture is going to focus on code of ethics and professional accountants. This is about ethics, and ethics is one of the most important topic in for your AAA because this is one of the questions that is no doubt going to come for your AAA exam. Now before I start this video, let me tell you, uh, you can take it as a warning or anything, that this video is going to be super lengthy. It's going to take at least 4 hours because this video is very lengthy. So it's a request that you watch this video till the end, because in the end I'm going to disclose what are the exam techniques and how to do this question, how to solve this question, ethical question, what are the steps that you need to do in the exam. So that's why you need to watch this video till the end. Okay, and I'm going to do 2 questions on ethics to tell you how to do it. So let's start with our ethics. As we all know, like any profession, ethics is important for auditors as well, or you can say professional accountants. In this video, we are going to focus on conceptual framework and fundamental principles. Whenever ethics come, okay, we are going to relate it to the conceptual framework. Okay, and there we are going to go through some fundamental principles. Then we are going to go to the ethical threads, confidentiality, and approach to the exam question. This we are going to cover at the end. Now, this is an overview of what we are going to do in this lecture. Conceptual framework. I'm not going to discuss what is conceptual framework, that is a principle-based model. No. Conceptual framework you have already covered in SBR. Okay. That is a principle-based this thing. It gives guidance on how to measure assets, liability, income, expense, equity. All those things I'm not going to cover in audit. Okay, the reason I'm telling is because your ethics and conceptual framework, they both are principle based. Okay, they just give a guidance on how to be ethical. So for this, we are going to rely on our ACCA code of ethics and conduct, because any accountant or any auditor needs to comply with ethics first. Before we touch upon the auditing standards, we first need to know what are the ethical issues that an auditor needs to face. For that, we have to know the code of ethics that they need to comply with. And we are going to use the ACCA's code of ethics and conduct, which is a principle based. Okay, the 5 fundamental principles that we are going to cover in this lecture. Then the threads. What are the ethical threads and how to overcome them? What are the safeguards? So this is an overview of this lecture, but it's going to be a pretty lengthy lecture because the threads are so many. There are so many threads and all the threads has been discussed with the safeguard for each specific thread. That's why this lecture is pretty long. But this is the most important lecture. If you miss this lecture, you are going to miss a valuable marks for your AAA, because ethical question, 100% you are going to get question on ethics. In fact, in ACCA, in any professional level paper, you can expect an ethical question, and same for AAA. So let's start with the exam focus. From the exam's point of view, what are the things you need to know? As I told you, that ethical questions will come in every exam. No issue, no doubt. You pick up the past paper and see. You will not see a single question paper where ethical question didn't come. Second reason is, okay, how a question will appear. They will tell you evaluate. Okay, the verb will be evaluate ethical and professional issues in a given scenario. Not just ethical but professional issues as well. Okay, so for this you need to take help of your fundamental principles, ACCA's code of ethics, the 5 fundamental principles that we are going to cover soon. What are those fundamental principles? Then we have evaluation. See, when you are told to evaluate, the requirement itself is evaluate ethical issue. Evaluate is not just identify ethical issue or just explain. No, you need to consider what is the significance of that thread. How significant is that thread? Is some thread you can just ignore, they are not so significant. Some you need to take action because they are significant, so you need to evaluate that as well. Then you have to consider the safeguard. It is not enough for you to get a pass mark if you just write ethical issue and you do not give any recommendation, any safeguard, how to overcome those, how to reduce the threat. And a question on ethics will require you to state the rules and principles and apply them to a scenario. So a question on ethics will be like, you state the rule that this is an ethical issue according to the guideline. This is how you need to behave. This principle has been breached, and this is how you overcome through the safeguard. At the end, also, we are going to see how we'll show you with an illustration how to do that, a question on ethics. Because a question on ethics is a very standard question. The way you solve an ethical question for every exam is same. It's just the name of the company is different, the scenario might be different, but the approach is same. So let's start with the 5 fundamental principles. The ACCA has 5 fundamental principles. You must have known this from your earlier studies also. Okay, this is nothing new. Every paper you will come across these 5 principles only. Your objectivity. Objectivity means you are straightforward, you are honest in all your business relationships. Whatever you are giving is true picture of your financial statements of your company. Next we have integrity. Integrity means you are honest. Integrity means you are honest. Objectivity means you are not being influenced by anyone. That is, you are independent. You are taking your decision. If you want to, as an auditor, if you want to give an opinion about the financial statements of a company, that's your own opinion, your objective. You're not biased towards any group or not being influenced. Then we have professional competence and due care. That means you should have the skills. As an auditor, as an accountant, you should have the skills that is expected of you. You have to upgrade yourself. You have to be updated. You should have the knowledge. It should not be outdated. Professional behavior. That means you should not do any action that will bring a discredit into your profession. You are acting in a professional manner. Then comes confidentiality. Confidentiality as a separate topic we are going to do in this lecture. Okay. Confidentiality means you are not giving any confidential information to third party or any party unless you don't get the approval or the consent, or you have certain duty to disclose it. We'll see that later, what are the reasons why you need to disclose sometimes confidential information. So these are the 5 fundamental principles. Now I didn't explain it so much, I didn't give the definition of all these 5 because this you can get it from anywhere, it's everywhere. Okay, but just know that these are the 5 fundamental principles and you need to use this 5 in your exam to explain out of this 5 which one in your scenario has been breached. Sometimes it is integrity principle which has been breached, sometimes it is objectivity, sometimes it is more than 3 or 4 has been breached, sometimes it's just one. But you need the support of these 5 fundamental principles to answer your ethical question. You need to know which one has been breached. To know that, you need to know the definition of each 5. Now let us go to the reasons why a person might breach these fundamental principles. In a ideal scenario, okay, let's say you are very in a perfect market, you will assume that all the 5 principles has been met. You are taking care of integrity, objectivity is there, professional competence has not been breached. But in reality, the scenario is not like that. There is always some pressure to breach those fundamental principles. Now, what are those pressure? An auditor or an accountant, sometimes they will be asked to breach these principles by whom? By their employer, by their customer, by their supplier or the lender. Why? It is purely for their benefit. They are going to get some benefit, some motive is there. Okay, but conceptual framework says professional accountant, they should always look for the thread and see whether there is an appropriate safeguard or not. Always. They must not. So these are the things which they must not do. They must not allow pressure from anyone else. Because if they allow it, then it's a breach of which principle out of the 5? Objectivity. Next, they should not be allow themselves to be pressured, neither they themselves should pressure someone else to breach the fundamental principles. Both are not correct, unethical. Now, examples of some pressure, like you are being asked to misrepresent the financial statements, maybe to get a loan or something. Maybe you are asked to show your debt as less so that you get a bank loan easily, right? You are being asked to lie to the auditor. You are being asked to sign off as completed, whereas it was not completed. You might be asked to inappropriately reduce the extent of the work performed. So these are some examples of pressure. Now coming to the safeguard. How do you apply the safeguard? Discussing the matter with the individual. So this is how you do the safeguard, and make sure that you, when you write your answer, you do it in this steps, this order. Whoever is pressurizing you, first discuss the issue with that person and try to resolve the issue. If that is not possible, okay, you tried it, after that it failed, second you go with the manager. You go to the manager with the matter and discuss it with the manager. If the manager is not the one who is exerting that pressure, if that is also not done, third, you need to go within the employer. Maybe you can go to the human resource department to get some advice, or you can use a formal dispute resolution process or whistleblowing policies in your organization, or you can seek advice from ACCA, because remember all these principles come from ACCA's code of ethics. So you can get advice from ACCA or are the independent professional advisor. You can seek legal advice also sometimes. And last but not the least, if no safeguard has been there, you went through all the steps, last is resign. Okay, but it should not be the first step. You withdraw from the engagement or you resign simply. Now, ethical thread. So this are the, to do ethical thread, you first need to identify the thread, which we are going to go. We are going to go through 5 types of thread. You need to identify out of 5 which is this thread. Second, you have to assess those thread. Third, you need to apply safeguard. Either you eliminate the thread or you reduce the thread to an acceptable level. Most of the time you cannot eliminate the thread completely. You need to reduce it to the acceptable level. Ethical implications for non-audit services. What are the ethical implications for a non-audit services? I still didn't reach to that stage, okay, where we are giving the list of ethical threads and safeguard, okay. Before that, I'm just introducing you slowly, I'm taking you there. So you need to wait a little bit. When a practitioner provides non-audit services, remember ethical issues will arise. This needs to be considered before you accept the work. Okay. What are the things you need to make sure that whether they are competent enough to give that services or not? Because you being an auditor giving a non-audit services, you have to first have that competent to give that service. Second, if the assurance is being provided, if you are giving any kind of assurance, I'm not talking about audit, any kind of assurance, practitioner must be objective. Why? Because the subject matter where you are giving that conclusion, it is relied upon an intended user. It is based on the user. It is not, for example, if you are auditing financial statements, it's very easy to say whether it is it is giving a fair and a true picture or not, because you know the typical standard. You just need to know whether the company has complied with the standard or not. Here, it is based on the intended user. Every user is different. Their things might be different. You understanding? For example, you have been asked to prepare a forecast for a client, and then you give assurance on that forecast. You are the one who's preparing that forecast. You are the one who's giving that assurance also. So this is like a self-review thread. What is self-review thread? Out of that 5 threads, this is one of the type. Okay, self-review. That means you are reviewing your own work. It's like you are correcting your own work only. Okay. It's like auditor is auditing the financial statements which they have prepared. It's like that. So that's why you have to be objective. Thread still needs to be assessed, whether it's a non-audit services, whether you are giving up other types of assurance, not just audit. Still, thread needs to be assessed, and same safeguard needs to be implemented there also. Okay. Now, identifying thread. These are the 5 threads. Number 1, self-interest thread. Biggest portion of it, portion of the thread is in the self-interest. The self-interest means you as an auditor is having some kind of interest in the client where you are auditing. There are so many examples of self-interest thread. We are going to go through all of it. Self-review thread. We just went. You are correcting your own. Third type of thread is familiarity thread. You become so close with the client, the auditor, that you overlook many of the mistakes, right? Intimidation thread. You are being pressurized. You are being asked to do something which is not correct, which is unethical. Last but not the least, advocacy thread. You are representing your client. You are advocating on behalf of your client. Okay. So these are the 5 types of thread. You need to know this 5 types of thread because you need this to answer your ethical question. First, we started with 5 fundamental principles. Then we went through the 5 threads. It's very easy for you to understand because 5 threads, 5 fundamental principles only. Now, we are going to go through the self-interest thread. Examples. Own shares when you are having a share. I'm going to go in detail in each of this. So right now I'm not going to explain you what it means. Just go through this list. When you're having a share. Fee dependency. Your fee is dependent. Huge portion of your fee is dependent. Gifts and hospitality. Loans. Business and personal relationships. Employment with the client. Litigation with the client. Overdue fees. Contingency fees. All this will give rise to self-interest threat. Okay. For all this we'll explain what it means in detail and how to overcome all these types of threat, the safeguard. Next, we have self-review threat, accounts preparation. You prepare the account, you do the internal audit, you do the tax computation, valuation services, client staff joins the audit firm. Familiarity threat, long association, personal relationships, moment of staff between firm and client, gifts and hospitality, advocacy threat, representing the client, promoting the client, negotiating on behalf of the client, and intimidation thread, fee dependency, personal relationships, audit partner lives to join client, litigation with the client. So all these are examples. Now we are moving to assuming management responsibilities. This is also kind of ethical issue. You as an auditor, you have certain responsibility. Manager has a certain responsibility. You cannot take manager's responsibility. Okay. So what are those management responsibilities? Which on an auditor sometimes assume that is their responsibility. Like it is known as management thread. This is another type of thread that is not discussed in the 5 threads, but it can be taken as a 6th type of thread. Okay, where the auditor assumes the management responsibility as their responsibility. Management responsibilities of a client, that is not your job. Let the management of the client do that job, because it will make you not, it will create a threat to independence. Understanding? It is known as management threat. So a firm must not assume management responsibilities as a part of assurance engagement. Remember, when you're doing an assurance engagement for a client, management responsibility is not your responsibility for that client. Your job is just to give assurance, that's it. Firm should take steps to ensure that client management makes all judgments. That it is the client who is going to make all the judgments and decision, the client management, not you. What are those responsibilities? Management responsibilities. Like setting policies and strategic direction. This is the responsibility of your client's management, not your. You're not going to go and set policies for them and do strategic direction and tell that it's an assurance service. No, it's not a part of assurance service. All these are not part of assurance service. They should be avoided by the auditor. Hiring or dismissing employees, directing and taking responsibility for employees' action, authorizing transactions, deciding which recommendations to implement, reporting to those charged with governance on behalf of management, taking responsibility for preparation and fair presentation of financial statements. No, neither you prepare, neither you give a fair presentation. It's not your job. So all those things has to be avoided. Taking responsibility for designing, implementing, and maintaining internal control, not auditor's job. It is the management's. Assessing the significance of threat. Now you assess how significant the threat is. How do you do that? Factors affecting the significance of threat. These are the factors which affects the significance, like value. When you go by the value, sometimes the value is so huge that the threat becomes very significant. Like, what types of gifts or hospitality are you receiving from your client? Is the value of the gift too big? If it's, then threat is very significant. If it's very small amount of gift like pen, pencil, some mugs, threat is not so great. Seniority of the staff. When considering rotation of staff, when you're rotating the staff, the more senior the staff is, the more the thread, the more significant the thread is. Because seniority, the more senior a staff is, the more they can pressurize the junior, the new graduates, Impact to the audit firm. This is considered relating to the fee dependency. If your fee is very much dependent on a particular client, significance to thread is huge. That's why it's better to have as many clients as possible. Materiality to the financial statements. If it's material, like when considering whether non-audit service can be provided. For example, most of your fee, I'm talking from the point of auditor because this is an audit subject, right? When you are considering giving non-audit service to your audit client, you have to see the fee. Is the fee, majority of your fee is from non-audit service? If it is so, then it is said that it is very material to the financial statements. And materiality means threat is very significant. Safeguard. What is safeguard? First, understand what is safeguard before we go to the safeguard. Safeguard means any action that you take that either eliminates completely or reduces the threat to an acceptable level. Now we are going to go in detail of this thread, starting with the self-interest thread. All this will be self-interest thread now. I have listed the thread and also the safeguard for that thread, for that particular thread. It is not general. Starting with, I have named the thread also. Okay. Fee dependency is the first thread. Fee dependency is a self-interest thread. Why? Because if larger proportion of your fee is from one partner, you have interest in that client, right? You will have a self-interest. You are motivated because your fee is dependent. Huge proportion of your fee is dependent on that single client rather than having many clients. Okay, so you become over dependent, and when you become over dependent on that firm, on that client, auditor can ignore any adjustments to the financial statements. Why? Because auditor does not want to lose that client. Their fee is dependent on that one client. So these are the factors that is relevant when you evaluate the threat. What is it? Operating structure of the firm, how the firm is structured, whether the firm is well established or new. If it's a well established, your fee, you do not want to lose that client. But if it's a new, fee is not so much, you don't mind losing that client. You understanding? Significance of the client to the firm is how significant the client is to you. The firm means audit. We're talking about audit firm here. Now we are going to the safeguard for fee dependency. What are the safeguard? Some safeguard is for non-listed, some for listed entities. It's different. For non-listed client, safeguard is if fee from an audit client represent a large proportion of the firm's total fee. What does it mean? Firm should implement safeguards such as, these are the safeguard for non-listed. You increase the client base so that you do not become dependent on one client only. Second, you have an independent review of the work. Again, safeguard, but this is for listed client. For listed client is different. A firm's independence is threatened and should be reviewed. If the total fees from a listed audit client exceeds 15% of the total firm's total fee for 2 consecutive years, please understand this. If your fee for 2 consecutive years, if you say it exists 15% of your total fee from one client, that means you are dependent on that client. It's a threat. Should not be. This is for the listed client we are saying. A firm should disclose the issue. So you should disclose this issue to whom? To those charged with governance at the client. That means the audit committee of the client or the non-executive director of the client. You can disclose. You have to disclose it. You should disclose it. Not an option. An independent engagement quality control review should be performed. by a person who is not a member of the audit firm. They need to express an opinion. Okay, this can either be performed as a pre-issuance review, that means before the second year audit opinion is issued, or a post issuance, that means before the third year audit opinion is issued. Okay, see this is a long list. Okay, how do you remember so many things? Question might be coming in your mind at this stage. How do you remember? This is just first one. You have, I don't know, I think 30, 40, 50 maybe threads. How do you remember all this? See, all those 30, 40, 50 reviews will not, the threads will not come in your exam. Maybe one or two. Maybe one or two. But just memorizing this, can you memorize it? It will not help you. You cannot memorize it. Trust me. If you try to memorize, you will forget one or the other. Or you might take this one as that one. You might fit this safeguard for the other thread. It happens. So what do? My advice is just read and understand. Because understanding this type of threads and the safeguard is pretty easy. It's very easy. Trust me. Read once or twice if you want. By the time you go to the exam hall, and if a similar thread comes, you'll be able to answer it. Trust me on this. When I'm telling you, you will not forget. Try to do more questions and see the pattern, which type of thread is usually asked. Because there are one or two types of thread only, which is most of the time which is tested. 80% of the time that thread is tested. Maybe it could be a self-interest thread regarding fee dependency. Maybe it could be an advocacy thread. Any type of thread. Some threads are regularly tested. Some, okay, they're less. But it's always better to go through the list. I mean, just see fee dependency. What can you do? Try to reduce the dependency. How? Expand your client, do a review, do a quality. So these things are, some things are very pretty much easy, and you can even use your common sense to answer. You do not need to memorize the bullet points. You will forget listed client, non-listed client, you know. So that's a piece of advice that I wanted to give before I even go deep into this and you get lost somewhere. Where are we? Because it's a pretty long. We are now in 22 slide. There are total 98 slides in this lecture. 98. Coming to the next type of thread. This is also a self-interest thread. All these are self-interest thread. When we go to the next type of thread, that is self-review, I will tell you. You will know. The name will appear on the top of the screen. Next type of thread is gifts and hospitality. The more you receive gift, you will have some types of self-interest. Self-interest means auditor will have some kind of interest over there, isn't it? Some motive is there. What is this type of thread? Acceptance of goods, services, or hospitality from an audit client. That means audit client is the one who is giving the auditor some goods or service or any kind of hospitality, some preferential treatment is given to that audit. And this creates a self-interest. All these things, remember, all this thread should be avoided at any cost, okay? That means what should you do? Don't accept the gift. You can say like that, right? Remember, this is not only self-interest thread. Some type, some examples, some thread, they create more than one type of thread. Like in this, not only self-interest, it creates intimidation thread also. Why? Because you might be forced or pressurized to do something, because they might tell you, we have given you the bribe, we have given you the gift, now do this thing for us. Or otherwise return the gift. Third is familiarity thread. You become so close with the client, okay, that you expect such kind of gifts and hospitality all the time is given to you. So it's a familiarity thread. Okay, what are the safeguard? Do not accept. Do not accept the gift and hospitality from a client unless the amount is very small. It's very trivial amount, or you know, gifts and hospitality which are trivial. Remember, even if it's small, but it is intended to improperly influence the behavior of the recipient. That means your main motive is to influence the behavior of the auditor, so that auditor takes listens to you. That's why you're giving those gifts. If it is so, it should not be accepted. Even if the amount is trivial, is very small, it should not be accepted. So these are the safeguard. The third thread is owning shares. This is basically like financial interest. It is something which is easy, right? You own shares. When auditor owns shares in the client company, definitely they will have some financial interest there. So auditor, they will want to maximize their return, right? So because they want to maximize the return from the investment, what do? They overlook audit adjustments, and this can affect the value of the investment. Okay. Safeguards. What are the safeguards? A audit firm, they should, if they have any direct or material financial interest, it should be disclosed. Okay. But the best is whether direct, whether material but indirect. An audit firm should not have this type of interest in the client. Okay. They must not be held by a firm or a network firm, an audit team member, or the immediate family of a team member. This type of interest should not be have. They should not have this type of interest. That means they should not own shares in the client, the audit firm, or the member of the audit team member, a partner working in the office connected with the audit engagement partner. This they should not have any financial interest in the audit client. These are the safeguards. Any partner providing non-audit services to the audit client, they also should not have any kind of financial interest. Next, we have more safeguards for that. Owning shares. An immediate family member may hold a financial interest, may hold, such as pension or share options. But if they have, like if they're given the share option, what should they do? They should dispose it. They should sell off. Example, when there's a right to exercise the option. Financial interest received indirectly. How can you indirectly receive financial interest? Maybe through inheritance, or you must be gifted. Still, it should be disposed immediately. Whether it is direct, you're having the share or share options, or indirect, through inheritance or gift, you should sell off. Next, the fourth type of thread is overdue fee. Okay. If a significant amount of fee is not being paid before the auditor's report for the following year is issued, it's a self-interest threat. What are the safeguards? You obtain either a partial or a full payment for the fee. An independent reviewer should come and review the work performed to ensure that objectivity has not been impaired. Because you are having self-interest, so if someone needs to come and review you, the auditor I'm talking about here, who has not received the fee. Okay, because if you have not received the amount of fee, what happens is the client can easily tell you, you need to do this, you need to do as I say, otherwise you are not going to get the full payment. So because of that pressure, auditor will listen to the client and do things. Okay, that's why an independent reviewer should come and review the work performed. When fees remain overdue for a significant amount of time, I'm not talking a small amount of time, for a major amount of time your fee has remained overdue. Okay, what the firm should consider whether the overdue constitute a loan, or whether it is appropriate to seek a reappointment or continue with the engagement. You have to see, you have to consider this thing. Can you go ahead with that engagement, or you need to reappoint? Or sometimes that overdue fee could be, maybe you have taken a loan, so you have to see whether it is a part of a loan or not from the client. Okay, loan and guarantees, another type of thread. If you have taken a loan or a guarantee from your client, again it's a threat to objectivity. But a loan or a guarantee, an assurance client, okay, from an assurance client, that is a bank or a similar institution. If you are taking it from a bank, the same loan has been taken from a bank, then it's not a threat to independence. That means your assurance client is a bank, and from them you have taken the loan, then it will not create a threat to independence, provided that these things are there. The loan is on commercial terms, it is made in the normal course of business, then it's not an independence to threat to independence. Safeguard. What are the safeguard? Any loan or any guarantee between an audit client and a firm, okay, the audit team member or their immediate family, any type of loan, whether it is between the audit and the firm, sorry, the audit client and the auditor, or with the audit team member or their immediate family, that are not in the normal course of business, not in the normal course of business, not even in on commercial terms are not permitted. When you take a loan, it has to be on commercial terms. It have to be made in the normal course of business. Then it's okay. Then there's no threat. Otherwise, it should be avoided. Loans to audit clients are not permitted unless immaterial to the firm or individual and the client. You can give to the audit client, loans could be given if it's immaterial. Okay. Now, business relationship. If you're having any types of business with the client, you will have a self-interest there. Why? Because you want the business to profit ultimately. It could be maybe through joint venture, right? So you want to see the business doing successful, right? Or the purchase of good or service from an assurance client. If you're purchasing a good or service from an assurance client, this necessarily will not give rise to a threat to independence. Remember, you can buy goods and services from your assurance client, but provided the transaction is a normal course of business and on commercial terms. Here also similar like a loan. It should be in the normal course of business, you are purchasing goods and services and on commercial terms, then there's no threat. You should also understand what are not threats. Sometimes what looks like threat might not be threat. That's why it's very important that we are going through this list. Understood? Safeguard. What is the safeguard for the business relationship? The auditor, they should not have any close business relationship with the client. No close business relationship. Okay? Unless any financial interest is immaterial. Sometimes you might have, but the financial interest is very immaterial. In that case, okay, you can. But most of the time what happens is really financial interest is not immaterial, it's material. That's why they tell no close business relationship. You should not have any business with your client, the auditor. But if you're purchasing goods and services from the audit team member, okay, and it's a material amount, you have to remove that person from the audit team. Okay? Or they should reduce the magnitude of the transaction. That means either the volume, either the amount that is so material should be reduced. Out of those two things has to be done. Potential employment with an audit client. When you are an employer in the client where you are auditing. Okay? If a member of the engagement team has reason to believe they may become an employee of the client, they may wish not to do anything to affect their potential future employment. Correct, no? If they know that they are going to be getting employed or hired in that client firm, they will do anything to protect their employment. What are the safeguards? They must maintain policies and procedures, okay, which requires individual to notify the firm of the possibility of employment with the client. That means they have to be notified that there's a possibility that this firm might be employed by the client. Remove the individual from the assurance engagement. If you as an auditor are going to be an employee of your client, you have to be removed from the assurance engagement. Okay. Perform an independent review of any significant judgments made by that individual, because when that individual who is going to be an employee of that client where he is auditing is making some judgment, most likely he might be making a biased judgment. Okay, it might not be objective. That's why you have to make someone else come and do an independent review on that. Okay. Contingent fee, another type of threat. What is contingent fee? That means auditor sometimes are told that if you maximize, like they will get an incentive to ensure a particular outcome is achieved, and this will increase the audit fee. So the audit fee is dependent on some condition. That is the meaning of contingent fee. Okay, if they improve the performance of the company or particular outcome is achieved by that auditor, they are going to get an audit fee. Audit fee is going to be maximized. Example, overlook audit adjustments that would reduce profit. So what happens now, the auditor also will want to increase the profit. So because he wants to increase the profit, any audit adjustments that can reduce the profit, he will overlook, he will ignore them, because his fee is calculated based on the profit now. What are the safeguards for such a situation? Fee based on a particular outcome. Okay. Example, level of profits of the company are not permitted for audit engagements. If you're an auditor, your fee cannot be based on a particular outcome. For example, the profit of the company, your fee cannot be based on that. Contingent fees are not permitted for non-assurance services provided to an audit client. If under certain conditions, contingent fee cannot be permitted for non-assurance services. If you are giving it to an audit client, for an audit client you are giving non-assurance services, your fee cannot be dependent on this thing. If the fee is material to the firm, it cannot. Then contingent fee are not permitted. Outcome of the non-assurance services is dependent on future judgment related to the audit of a material amount of financial statements. What does it mean? That means whatever the outcome of non-assurance services, it is dependent on the audit of the financial statements. Okay, material amount of financial statements. In that case also contingent fees are not allowed. Compensation and evaluation policies. Okay, a self-interest thread is created when a number of audit team is evaluated on or compensated for sending non-assurance services to the audit client. That means you are either evaluated or you are compensated based on how much non-audit assurance services you are giving to the audit client. Based on that, the audit team is being compensated. It's a self-interest thread because now you will want to give more and more non-audit assurance services to the audit client. And the significance of the thread also will depend on certain things. Whether this thread is significant or not depends on certain things. Proportion of the individual's compensation or performance evaluation that is based on the sale of such services. For example, if you are selling non-assurance services, okay, the more you sell, performance evaluation says that you have performed better. If it is this so, that means the thread is very significant. The role of the individual of the audit team. What is the role of you in the audit team? Depends on that also. Whether promotion decisions are influenced by the sale of such services. You are going to get promoted or not are based on how much you are going to sell non-assurance service to the audit client. If it is so, it is very significant. What are the safeguards? Key audit for key audit partners. Okay, if it's a key audit partner, you cannot evaluate or you cannot compensate them based on their success in selling non-assurance services to the audit client. For audit team members, the firm shall do these things. Revise the compensation plan or evaluation process for that individual. Revise it. Second, remove that individual from the audit team. Third, have a professional accountant review the work of the member of the audit team. Next, actual or threatened litigation. Next type of threat. What is litigation? Litigation, it's like a breakdown of trust in relationship between the auditor and the client. Okay, and when this happens, what happens? Management might become reluctant to disclose certain information to the auditor which auditor needs. You understand? So this, how significant this thread is, it depends on the materiality of the litigation. How material is the litigation? Or whether the litigation relates to the prior assurance engagement or not. Safeguard. We have more safeguard for it. It may be possible to continue other assurance engagement. You can continue other assurance engagement. Okay, it depends on the significance of the threat by discussing the matter with the client. If the litigation involves an individual, remove that individual from the engagement team. Having an appropriate review of the work done. If adequate safeguard cannot be implemented, firm must withdraw or decline the engagement. You cannot accept the engagement. If you have already accepted, withdraw from that engagement if safeguards are not there. Okay, all the safeguards needs to be there. Now we are coming to the next type of thread, that is familiarity thread. So we finished the self-interest thread. Coming to the familiarity. Familiarity means the more you stay, okay, you are very familiar with each other. Maybe you have been auditing the client for 10 years, 5 years. So you become familiar with that client. That is the meaning of familiarity. Okay. Long association of senior personnel. You are there, you are associated with the senior personnel for a long time. It's a threat. Okay, that means you are using the same senior personnel in an engagement team over a long period. Because of this, okay, auditor becomes less skeptical. They do not challenge the client because they assume that they know the client very well. They have been auditing for a long time. So many time material misstatements go undetected because of this. Okay, and a self-interest thread also can arise because of this. A self-interest thread may also be created as a result of the individual's concerns about losing a long-standing client. Self-interest means wherever you have some interest. Your self-interest means auditor's interest here in this case. Okay, why auditor will be concerned? No, they do not want to lose a long-standing client. Who wants to do that? So that can give to rise to a self-interest thread also. More we have in relation to the individual firm. Okay, the firm should in relation to the individual, the firm should consider this thing. What is it? What is the length and the closeness of the individual's relationship with the client? The length of the time on the audit team, the extent of the direction, supervision, and review of the work of the individual, the extent of which individual has the ability to influence the outcome of the audit. All these things matters. Then, if it's an audit client, in relation to the audit client, the firm should consider this thing. This is from the client's point of view. Earlier one, this list was from the point of the firm itself, the auditor. They need to see what is their length of time in the audit team, how close they are with the client. Now this is from the point of the client's side. Okay, they should see the structural changes in the client's organization, whether the client's management team has changed, whether the complexity of the subject matter has changed. Now we are moving on to the safeguard. For non-listed entity, you rotate the individuals of the audit team. Change the audit individual. Do not keep the same individual over a long period of time. Change the role of that individual or the nature of the task they perform. Perform an independent internal or external quality review. For listed client, you engage the engagement partner, EQCR, or any other key audit partner must not add for a period of more than 7 cumulative years, time on period. For listed client, okay, if the client is listed, for the engagement partner or any key audit partner, they must not add for a period of more than 7 cumulative years, one after the other. Should not add. More than 7 years, you cannot be an auditor for the same client. 7 cumulative year. Okay. After the time on period, the individual must serve a cooling off period. Time on period is the 7 years. After that, it is known as cooling off period. What is this cooling off period? It is this 5 years for an engagement partner. You still can go on 5 years more for an engagement partner. 3 years for an EQCR and 2 years for a key audit partner. That means this is after the 7 years. 7 years is the time on period. After that, this is added. This is known as cooling off period. The 5 years if it's an engagement partner, 3 years if it's a QC, 2 years if it's a key audit partner. Now, we have more for the listed client itself, the safeguard. In exceptional circumstances, a key audit partner must be permitted. Exceptional, okay? Key audit partner must be permitted to serve a 1-year extension if continuity is important to maintain audit quality. That means it's very important that they are there because audit quality will be maintained if they are there. For in that reason, 1 additional year could be there. It could be extended for 1 additional year. But these circumstances are very exceptional, okay? Not always. If an audit client becomes a public interest entity, that means the firm where you are auditing, your client becomes a public interest entity, the length of the time served as a key audit partner before the client becomes a public entity is taken into account. That means, let's say out of that 7 year, we say that more than 7 years they cannot. So let's say first 3 years they were private. After the 3rd year, they become a public interest entity. So when they become a public interest entity, the time taken to serve them, like to audit, starts from the time when they were not public interest entity. That means the first 3 years when they were private, that also will be counted. With that, the 4 years of public interest, that 7 year, that's how they will count the 7 year to audit. So it does not matter when you become public interest entity. The time you are a client for that audit firm, the time will be calculated like that. Okay. If a key audit partner was a key audit partner on that engagement at a different firm, the length of the time served at the prior firm should be taken into account. Whatever the time you have served at the prior firm will be taken when you go for the new firm also. It will be taken. Oh, this looks like that the safeguards are quite long for this. We are still in the listed client and with the same thread. So, an independent regulatory body may provide an audit firm with an exemption from partner rotation. If the firm does not have sufficient people with the necessary knowledge and experience to enable partner rotation. See, sometimes partner rotation you cannot do because maybe you don't have other firm who has the skills and the knowledge. In that case, you are exempted. You should not do the partner rotation. Okay. During the cooling off period, cooling off means that 3 years and 2 years. Okay. The individual shall not be an engagement team member. You cannot be an engagement team member. You cannot consult with the client, engagement team or client. You shall not be responsible to provide professional services to the audit client. Okay. You means I'm talking to the auditor. Okay. Next, family and personal relationships. If you're having a family where, for example, in the board, you have your brother, sister, family member of your own, the auditors, familiarity thread will be there. This can lead to self-interest as well as intimidation threat. Intimidation because you might be forced or pressurized by them to take care of their interest because they are your family, and self-interest because obviously you want your family to do. Your family is there, so you will have some kind of interest, self-interest, right? What are the safeguard? The safeguard is for audit team members. Okay, you remove the individual from the engagement team. That means that team you will be removed. If you are an auditor, you will be removed from that engagement team. You cannot audit in a company where or for a client where you have a family there. I mean, you cannot audit your family business, for example. You cannot be an auditor for your family business in external auditor. Or you structure the engagement team so that individual does not deal with matters that are responsibility of the family member. Maybe you can be an auditor, but wherever you do not have to deal with your family issues, you you have to structure the engagement team in such a way. Okay, more safeguards. This is for other employees and partners of the firm. Okay, firm should have policies and procedures in place to provide guidance when a partner of the firm has a family or a personal relationship with someone the client who is able to exert influence over the subject matter even when the individual is not a member of the engagement team. Okay, you should have some policies and guidance in the company should be there. What should be done when you have someone, okay, your family member in the client. The firm should structure the individual's responsibilities to reduce any potential influence over the audit engagement and have an appropriate reviewer review the audit work performed. Yes, you can have that individual, you can have that auditor, but you should reduce their responsibility. I mean, their responsibility should not be there where the families are there or families dealing with. It should be away from it. And also make sure a reviewer comes and review the work that auditor has performed. Then we have recruitment services. Familiarity, self-interest, or intimidation threats may arise if the firm is involved in recruiting senior personnel for the client. So these are the three types of threats that can arise if it is the auditor who is recruiting the senior personnel for the client. The firm may also be considered to be assuming management responsibilities. Earlier, we have seen in the earlier slides that hiring or firing employee is a part of a management responsibility, which auditors are not supposed to do it. So if they recruit someone, it is a management responsibility, which should be avoided. Reviewing qualifications and interviewing applicants to advise on financial companies is allowed. Yes, you can review the qualifications, you can interview the applicants. Okay, I'm talking humans auditor. To advise on financial companies is allowed. That is allowed. That's not a thread. Okay. Next, what are the safeguards for it? Recruitment services may be provided to an audit client. Okay, it can be provided that the client makes all management decisions. Yes, you can give the recruitment services, but the decisions should always be made by the management. Like who is suitable candidate, or you determine the employment terms and you negotiate their remuneration. All this should be done from the management side. Okay. The firm cannot provide recruitment services in respect of directors or senior management who would be in a position to exert significant influence over the financial statements. Yes, you can give recruitment services for employees or middle level manager or lower level employees, but not for director or senior management. Why? Because these are the people who can exert significant influence over the financial statement. So those people you cannot recruit. Auditors cannot give recruitment services for those. Then we have employment with the audit client. It's a thread. When you are an employee in your client, you are an employee in your client where you are auditing now. Okay, it will obviously give a rise to self-interest and also familiarity because you have a close association with it, as well as intimidation threat because you could be threatened by the company. Okay, where an employee or a partner of the firm becomes a director or an employee of an audit client. Okay, you might become a director or you might become an employee of the client. So in that case, they should be avoided. The firm should ensure no significant connection remains between the individual and the firm, such as entitlement to benefits. Make sure that you do not have any entitlement to benefit or payment from the firm, or even participating in the business and the professional activities of the firm. An auditor should not do it. You should stay away from it. Then, the firm should consider the position taken at the client. What is your position in your client? The auditor's position. What position are you taking for? Are you a director or are you just a normal lower level employee? Or the involvement that person will have with the auditor. What is your involvement with the audit team? What is the length of the time since the individual was a member of the audit team? Former position of the individual within the audit team. All those things the firm should consider. What are the safeguard? Safeguard says you modify the audit plan. Okay, if you are an auditor and you are planning to audit in a company where you are an employee, you modify the audit plan. And then you assign individuals to the audit team who have sufficient experience in relation to the individual who has joined the client. For example, instead of you, assign someone else who has a sufficient expertise. Again, a review. If you see, most of the threads always have this reviewer who comes and review your work. Right? The former audit team member's work needs to be reviewed by the reviewer. Partners joining listed clients as a director or an employee in a position to exert influence over the financial statements. Okay. Now, what are the safeguards? See, independence is compromised unless subsequent to the partner ceasing to be key audit partner or a senior partner, the client has issued audited financial statements covering a period of not less than 12 months. And the partner was not a member of the audit team with respect to the audit of those financial statements. That means client has already issued financial statements, okay, at least for 12 months, and during that 12 months, the auditor was not the partner was not a member of the audit team. The audit partner was not a member of that audit team during that audit of the financial statements during that period. Okay, after that, you can be an employee of the audit client and be an auditor also. That means after you cease to be a key audit partner, okay, you at least for the 12 months, when the client's financial statements are being audited, you are not part of it. Okay, then independence is not compromised. Otherwise, independence is compromised. If a senior or a manager partner of the firm joins a listed audit client, independence is compromised. Unless 12 months have passed, the individual is the senior, the managing partner. That means from the time you're an auditor to an employee, there should be at least 12 months. 12 months should pass. That is the simple thing. Okay. And this is not for every employee. It is only for the senior or the managing partner of the firm. After you become an employee, after you have joined the listed audit client, from the time you left auditing, that means you were a senior partner or anything, there should be at least 12 months gap. That is the simple meaning of it. The next thread, accounting and bookkeeping services. Okay, where you are giving the services and you are only auditing. That's why it's a self-review thread. Okay. Next is self-review thread. This is also a long list of threads we have under this. So under the self-review thread, we are over with familiarity thread. Now we are moving into the self-review, where you are doing the services and you are only auditing. One example is accounting and bookkeeping services. That means you are preparing financial statements and you are only auditing. Okay. This includes preparing accounting records and financial statements, recording transactions, payroll services. Okay. So discussing accounting treatments and proposing adjusting journal entries are normal part of the audit process, and they do not create thread. If you just discuss that this is an accounting treatment, this needs to be done, it's just a normal part of audit process. It's not a thread. As long as the client is responsible for making the decision in the as long as the client is the one who is preparing the financial statements, you still can discuss accounting treatments or not. It's not a thread. The issue comes when you start preparing those financial statements. How do you safeguard? For non-listed client, we have separate. For listed client, we have separate safeguard. For non-listed client, okay, a firm shall only provide a non-listed audit client with accounting and bookkeeping services which are routine or mechanical in nature. That means you still can give services, bookkeeping and accounting services, only if it's mechanical and routine in nature. That means every day the same thing. This is only for non-listed client, okay? Second, services which are routine and mechanical in nature and therefore require little or no professional judgment. Why is it so that you can give this kind of services? Because there you do not need any professional judgment. Whether you do, whether the client do is the same thing. You can just use some system and do it if it's mechanical and routine. Wherever client has to give some judgment, professional judgment is required. There only auditors cannot come and give those services. Here, if it's mechanical and routine, no professional judgment is needed. Things like preparing payroll calculations based on client originated data. Data has originally been created by client. You just come and prepare payroll calculation. That you can do. That is not a thread. Or you're recording recurring transactions which are easily determined. Easily you can determine. So recurring transactions, yes, you can. They're not a thread. Then what are the safeguard? You post transactions quoted by the client to the ledger. You post client approved entries to the trial balance. You prepare financial statement based on information in a client approved trial balance. Okay, you can prepare financial statement, but it is information is the trial balance is made by the client itself only. Okay, client has approved. Professionals who are not audit team members must be used to perform the service. Okay, see, this accounting and bookkeeping services can be done by other people who are not audit team members. They are not the one who are going to audit. Okay, those they can give the services. An appropriate reviewer was not involved in providing the service should review the audit work or service performed. If you, the person who is giving the service, you cannot review, okay, that means you have to hire someone who is not giving that service. They can come and review the audit work or the service performed. Then we have some additional safeguard. This is for listed clients. For listed client, we have a firm cannot provide a listed audit client with accounting and bookkeeping services. Do you see how strict it becomes? The rule becomes when it's for listed client compared to unlisted. Unlisted, they still say, okay, give accounting and bookkeeping services can be given, provided it is done by someone else or mechanical and routine. Here they are saying you cannot even give also. For listed audit client, no accounting and bookkeeping services by the auditor. Firm can provide accounting services for divisions or related entities of a listed client. Yes, for their division, for listed clients, divisions or related entities, not directly the listed client. If Separate teams are used for giving that service and for auditing. Auditing and the one who are giving services should not be the same team. Okay. And also, divisions or the related entities that you are going to give services are immaterial to the financial statements. They are collectively immaterial to the financial statements that you are going to audit. Then we have internal audit services. It's possible. Auditor sometimes, external auditor can sometimes give internal audit services also, but there's a thread. Okay. It's a self-review thread. Auditor should not assume management responsibility. Internal audit is a part of a management responsibility. The firm should consider what is the materiality of the related financial statement amounts. Okay. Then, risk of the assessment of the assertions relating to financial statement amounts. And the degree of reliance that the audit team will place on the internal audit service. Now, what are the safeguards? The audit firm must be satisfied that management takes full responsibility for the internal audit. It is the management's responsibility, the internal audit. Okay, as well as the internal control. Professionals who are not audit team members must be used to perform the service. See, if you are not a team member, audit team member, you can perform the service. You can give internal audit services. But external auditor cannot give. If you are not part of an audit team, yes. A firm cannot provide internal audit service for a listed audit client. Remember that. Where the service relates to internal control over the financial reporting. Where that service means what? You are giving that relates to internal control over financial reporting. You cannot give such services, internal audit services. Even services for financial accounting system or in relation to amounts or disclosures that are material to financial statements, you cannot give. Tax services. Tax services is broad. There are so many under tax services. Okay. So if you provide tax services to an audit client, you can create a self-review because you are already preparing those tax and then you are already editing, or an advocacy thread. You may be asked to advocate or represent your client, talk on behalf of your client. That's why advocacy thread. Okay. Tax services. What are the some of the tax services? Tax return preparation, tax calculation for preparing accounting entries, tax planning and advisory services, tax services including valuations, assistance in resolution of tax disputes. All these are tax services relating to tax. Okay. Now, for tax services, the firm should consider these things. What is the characteristics of the engagement? Level of the tax expertise of the client's employee. And what is the complexity of the tax regime? Now, tax return preparation. Completion of tax return does not usually create a thread. If you complete a tax return, it will not create a thread like that. And therefore, there are no safeguards required also for tax return preparation. But for thread calculations, there's a thread. You might calculate tax. What is the safeguard for it? For non-listed client, you can use professionals who are not part of an audit team member to perform that services. That means to calculate tax. Okay, and you can make someone else review it who is not part of providing their service. For listed client, firm must not even prepare tax calculations of current or deferred tax. Where the figures are material to the financial statements, you cannot even prepare tax. What about the figures immaterial? That time, the safeguards for non-listed client should be applied for listed client if the figures are immaterial. Then we have tax planning and advisory services. Okay, it's a thread. Here the firm should consider what is the degree of subjectivity involved, because tax planning, and when you have to give advice, it requires a lot of subjectivity. That's why you need to consider what is the degree of it. Whether the tax treatment is supported by private ruling and cleared by the tax authority. What are the safeguards? Firm should not give this tax planning and advisory services to the audit client. Okay. When providing such services, firm should use professional. Same thing again. It's the same thing. When you are giving services, make sure you are appointing someone to review who are not part of an audit team to review your work and also the audit. Next, we have tax servicing involving valuation. Okay, if valuation performed for tax purposes is not subject to external review and the effect is material to the financial statement, the firm should consider these things. The extent to which valuation methodology is supported by tax law. You have to see this. The degree of subjectivity involved. The reliability of the underlying data. What are the safeguards? When providing such services, okay, the firm should use professionals who are not part of an audit team. Then you need to have a reviewer who is not part of an audit team. Then you need to obtain a prior clearance from tax authorities. Now, next thread. Assistance in resolution of tax dispute. The firm should consider the extent to which the outcome of dispute will have a material effect on the financial statement. Okay, that means if you're having a tax dispute, what is the material effect? Whether there will be material effect on the financial statements or not. Then whether the advice provided is subject of the tax dispute. The extent to which the matter is supported by tax law, regulation, or established practice. Okay, firm should consider all these three. Whether the proceedings are conducted in public. When providing such services, firm should do these things. Okay, the safeguard for it, that they should use professionals who are not audit team members. Remember, when you're giving an help for the tax dispute, you should use professionals who are not a part of audit team member. They should give this service. Next, again, as I told you before, reviewer is needed. So you have to have a reviewer who was not involved in giving that service. They have to come and review the audit work or the service performed. A firm shall not act as an advocate for the audit client before the public tribunal or court in the resolution of tax matter if the amounts are material to financial statements. You cannot be an advocate for your client if the amount is material to the financial statements. Regarding what? Regarding tax matter. Now, next safeguard. The firm is allowed to have a continuing advisory role. Yes, you can still keep giving advisory role. Example, what? These are allowed. Responding to a specific request for information. Maybe you are asked that they want some specific information from you. Yes, you can respond. Second, providing factual accounts or testimony about the work performed. Yes, you can do that. Assisting the client in analyzing the tax issue. That also could be done. Next is IT services. Okay. When it's an IT service, it gives to self-review thread. Okay. And IT service is also one of the management responsibilities which auditor should not do. The firm should consider these things regarding IT services. Number one, the nature of the service. What is the nature of the IT service and the extent to which they impact in the accounting records. And the degree of reliance that the audit team will place on the IT system. How much the auditor is relying on the IT system. The degree. Firm should consider all these things. Okay. The firm can provide IT services which involve this. They can provide. They are not thread. You can design or you can implement the IT system only if it is unrelated to internal control over the financial reporting. Then you can design, not the ones which are related to internal control. Next, you can implement the off-the-shelf accounting software that was not developed by the audit firm, and it does not even require significant customization. It's not a customized, it's general package, you can see. Evaluating and making recommendation on a system could be done. Okay. What are the safeguards? The safeguards, one is for all the client. When providing such services, firms should use professionals. Again, professional. If you see most of the threads, one thing is use a reviewer who is independent of the service and use a professional who is not part of an audit team. This makes your work very easy, guys, because you can easily then answer. Okay, what are the safeguards? Next is audit firm must be satisfied that the management takes full responsibility. When it comes to IT service, auditor should know that this has been held, this is the responsibility of the management. Management is going to take care of it. For the listed client, firm should not provide IT services. If you see, listed clients are always very tough. They are more strict on their rules. They do not give a leeway that you can perform this services under this condition. They strictly they say you cannot perform IT services for a listed client. Okay, especially if those IT services are related to internal control. Okay, next is valuation service. Valuation services, you provide valuation services to a client. You can, right? If you do that, it creates a self review because you are valuing the services, you are only coming and auditing. It's a self review. And advocacy thread because you are doing it on behalf of your client. Advocacy thread. Some valuations will not involve significant subjectivity. It's easy to value them. You do not require so much of estimation and all. Okay. So for those, if the underlying assumptions are established by law or when techniques are widely accepted, what are those areas where subjectivity is not required? Something where assumptions are already decided by the law or the techniques are widely used by everyone else. That's how they value. Then it does not involve so much of subjectivity. Now, firm should consider, what should firm consider in this? Firm should consider the use and the purpose of the valuation report, whether the report was made public or not. Second, the extent of the client's involvement in determining the matters of judgment, how involved the client was. Third, whether the evaluation will have a material effect on the financial statement or not. If you have seen by now, you are in a better position to understand whatever the thread we went. The main thing is, are they going to have a material effect on the financial statements or not? If they have, it's a thread. Thread is very significant. That means they should not do. Auditors should not be a part of that service. In short, in general, that is the main idea. It's just repeated. In every thread, it is repeated. Okay, and also the degree of dependence on future event. So the degree of the subjectivity involved also. The more the subjective it is, the more auditors cannot do that job. The less subjective it is, yes, auditors can do. So what are the safeguards for all clients? Use professionals. It's the same thing. I don't think I have to explain it so much in detail because this has been repeated. Use professionals who are not part of an audit team to give valuation services. Again, have a reviewer who is not involved in giving that service. Make him come and review the audit work as well as the service performed. For non-listed client, things will be a little easier because the impact will not be so much on non-listed client compared to listed client. Now do you understand why non-listed client is little bit flexible, a little bit relaxed in terms of the rules? That's the reason. Okay. So for them, valuation services shall not be provided to audit clients if it involves a significant degree of subjectivity and it has a material impact on the financial statements. Two things you have to remember. In any thread, if it has a significant degree of subjectivity and impact on the financial statements is material, auditors should not do that service. They should not give that kind of service. For listed client, okay, you should not even provide that service at all. Whether it is subjective or not does not matter, but if it is material to the financial statements, you should not provide valuation service to your audit client. Simple. Then we have temporary personnel assignment. Sometimes assignments is temporary. For temporarily you have to review. Okay, like loan of personnel. Okay, this may create self-review. We know why. Advocacy, because you are working on behalf of your client, you are advocating, and familiarity thread. Okay, staff may be loaned to the client, provided you can give staff as a loan to the client, provided these things are there. The loan period is short. Yes, you can give. The person does not assume management responsibility. Then also you can give. The client is responsible for directing and supervising that person. In these three conditions, yes, you can. What are the safeguards? Safeguards are additional review of the work needs to be performed by the loaned personnel. The person who has been loaned, additional review of work has to be done on that. Not including the loan person on the audit team. They cannot be a part of an audit team. And not giving the loan personnel audit responsibility also. for any function that they perform during the loan assignment. Next is corporate finance services. Okay, this gives rise to self-review, we know, and advocacy thread. May be created if a firm does these things. What is it? It helps an audit client in developing corporate strategy. You should not do that. It is giving rise to self-review and advocacy thread. You should not develop, auditors should not go and develop corporate strategies for their client. Next, identify possible targets for the audit client to acquire. It's not your job again. Third, advise on disposal transaction, what to dispose, what not to. Fourth, assist in raising finance. So this things gives rise to thread if the auditor does it for the client. Provides structuring advice. Factors affecting the existence and significance of any thread. Okay, whether it is significant or not, the thread includes on these factors. What is it? Number one, what is the degree of subjectivity involved? See, this you can take for any thread, not just for this thread. If the degree of subjectivity is high, like you need to, it is very subjective. You cannot rely on facts. It's your own judgment. Where they need to make their own judgment, thread is very significant. That means in that condition, auditor should not give those kind of services. Second, whether the outcome will have a material impact or not, as I told you. If the impact is material, again the thread is very significant, auditor should avoid. Third, this is regarding corporate finance. Whether the effectiveness of the corporate finance advice depends on a particular accounting treatment or not. If it depends on a particular accounting treatment, the advice that you are giving, okay, fine, auditors can do it. Otherwise, someone else other than the auditor should give this service. That is the meaning of it. What is the safeguard? Where services can be provided. Okay, which area can the services be provided? Use professionals other than audit team member. Again, have a review not involved in audit. We have further services. This are prohibited services. Please understand. Those services which we went through were allowed. Now prohibited are. If it is any corporate finance services that are involving promoting or dealing or underwriting the audit client's share. You cannot promote your client's share. You cannot deal in those shares. You cannot underwrite the client's shares. If you're doing it, prohibit it. Second, corporate finance services where these are also prohibited, okay? That effectiveness of the advice depends on a particular accounting treatment or presentation in the financial statements. Okay, that means you are going to give an advice in such a way that your financial statements will be presented in that way. Whether it complies with the regulations, whether it complies with IFRS or IAS, you don't care. It should be avoided. Prohibited. Not avoided, prohibited. Second, audit team has a reasonable doubt regarding the appropriateness of accounting treatment. They are in a doubt whether this is appropriate also or not. Prohibited. Outcome will have a material effect on financial statements. Prohibited. Legal services. The next thread. Legal services can create self-review as well as advocacy thread. Okay. Now, legal services can be provided by a legally trained or authorized personnel only. Only be provided by this way. Legal services not anyone can provide. You should be legally trained as well as you should be an authorized personnel to do that. Okay, the firm should consider these things regarding legal services, whether it is material to the financial statement, whether the legal matters are complex and higher degree of judgment is required or not. What are the safeguards? The safeguards are where services are provided, firm should do these things. They should use professionals who are not part of audit. They should give this service. They should again use a reviewer who is not part of an audit. A partner or an employee of the firm must not act as a general counsel for an audit client. Remember, if you're an audit partner or you are just an auditor, you cannot act as a general counsel for your client. A firm shall not act in an advocacy role. You cannot be an advocate for your client, especially when the amounts are material to the financial statements. Next thread is client staff joins the audit firm. Isn't it? Your client can join the audit, right? And then they become the auditor of that same firm. This is a recent service with the audit client. This gives to self-interest. Obviously, you'll be having some interest in because you just left your company and joined the audit firm. Self-review because you are reviewing your own work. Familiarity because you have been in that firm for a long time, so you become familiar. Okay, that means earlier you were an employee or the director of a firm. Now you are in that same firm. Now you are an auditor because you have joined the audit team member. Okay. So when service with the audit client was before the period covered by the auditor's report, the significance of the thread will depend on what is the position of the individual held with the client. That means what was your position before you became an auditor, if you are auditing that firm again. And this will take place, this is concerned during the period before the auditor's report. Okay. Second, what is the length of the time before you left, since you left that firm, before you became an auditor, I mean. And the role of the audit team member. What is your role in that audit team member? Are you at a senior level, junior level? What is it? Intern? Depends. Matters. All this matters a lot. What are the safeguards? The safeguards is the audit team should not include individuals who, during the period covered by the auditor's report, have served as a director or an employee of the audit client. What does it mean? Let's say you are a director or a client or a employee. Okay. You cannot be an or you cannot sit in that audit team for that period where auditor's report is going to be made for that period. That means that was the period when auditor's report is going to be made. During that period only you have joined the audit team. You cannot be an auditor for that firm because you have just left the company and turned into an audit team. Okay, and that time auditor's report was not yet made, is going to be made. Maybe 3 months from now or 4 months from now, you cannot be an auditor during that time. Second, when service with the audit client was prior to the period covered by the auditor's report. That means you are giving the service, okay, before covering the auditor's report. That time an appropriate reviewer should come and review your work. Next thread, serving as a director. If you see the list of safeguards, they are very small, 1 or 2 or 3 safeguards only, max 3 to 4 safeguards you will find, not more than that. So, and most of it you will see the reviewer, the person, the professional who is. So most of the time it is similar. That's why this makes your work easier also to remember things in case if you are looking at this big list and you kind of forgetting things. Okay. Next thread is serving as a director or an officer of an audit client. That means you are an auditor, but you are also director in that same company where you are the auditor, the company for which you are auditing. That's a thread, no? This will give to both self-review as well as self-interest. What is the safeguard? The safeguard is a partner or an employee shall not serve as a director or an officer of an audit client. That means if you are an audit partner or if you are an auditor also, you cannot be the director or an employee in that company where you are the auditor. And a partner or an employee shall not serve as a company secretary for an auditor. You cannot be a company secretary also. I'm talking in terms of audit partner and auditor. Employee means auditor. Any audit. Okay. You cannot be a company secretary for your client unless it is permitted by local legislation. Management makes all the relevant decisions and duties are performed by routine and administrative in nature. In that condition, yes, but it's very rare. You can perform as a secretary only if it is law says so, only if the management makes the relevant decisions and duties performed are routine and administrative in nature. They are not duties which require so much of judgment from your side. Then okay. Advocacy thread, the next thread. Okay, this is you are promoting your client. Okay, the auditors are promoting their client. That means they are taking sides with their client. That is the meaning of advocacy thread. Examples are you can represent your client in your court case. Okay, and you know the matter is material to the financial statements. Second, you are negotiating on behalf of your client for finance. You are the loan of personnel from an audit to an audit client. You are giving a loan to a client. You are providing valuation services for your client. You are giving tax services to your client. This all are examples of advocacy thread. Now move on to intimidation thread, the last type of thread. So we are over with all kinds of thread. The previous 4, self-interest, self-review, familiarity and advocacy. Now intimidation thread is left. Intimidation means it could be actual or you are just perceiving some kind of pressure, maybe from your client. Okay. and this pressure is on the auditor. Okay, examples include fee dependency. They might say that major proportion of your fee is dependent on that client. Then you become intimidated to do what they say. Gifts and hospitality. They are giving you so much of gift. Your client is giving you so much of preferential treatment that you become obliged to do what they say. Family and personal relationships. If you are very closely tied with them, you are more likely to be intimidated by them. Recruitment services. You are the one who's recruiting for them, the employee. Employment with an audit client. Then definitely you are going to listen because they are also your employer now. And litigation between the audit firm and the client. Okay. Now, so we are over with all the kinds of thread. Now let us go to one term which I missed out. That is public interest entity. What is public interest entity? You should know this, by the way, as an auditor. What is public interest entity? The short form is PIE. Public interest entity is one which is listed. It should be listed. It should be defined by the law and also that means it is defined by regulation as public interest. You are there for the public interest. And third, you are audited under the same independence requirement as listed entity. How you are auditing the listed entity? Same way public interest entity also you have to audit. Now, examples like banks, insurance companies, credit institutions, these are public interest entity. These are known as public interest entity. Why? Because they have wide range of stakeholders. Having a wide range of significant stakeholders means you are a public interest entity like banks, insurance companies. So if you, in your exam, if you see any entity which is having a wide range of stakeholders, you have to treat that entity as a public interest entity. But when you're auditing, you can audit them in the same way as a listed entity. Okay. Now we are moving on to the third. We finished the threads. All the threads are over. We are moving on to confidentiality. Okay. Confidentiality was one of the fundamental principles from ACC's Code of Ethics. But this separately we are studying. There's a reason why. Sometimes, okay, the ethics says, ACC's Code of Ethics says, any information that member have acquired during their professional work, they should not disclose it to the third party without getting a proper authority. Or if they have a professional right or duty to disclose, they can. Otherwise, they should not disclose. That is the simple meaning of confidentiality. But there are some conditions where confidentiality is, you cannot comply with this. You need to disclose the information. Okay, but before that, let us see how this confidential information may be obtained from what area. From your firm who have employed you, from your business relationships, from your client, from your prospective client and employer. Okay. Another thing you need to remember, that if you are not working in the same firm any longer, still, even if your relationship is no longer, even if that person is no longer your employer, even if that person, that company is no longer your client, you still cannot disclose the confidential information that you have got during that period to outside people, outside the engagement team. That if you do that, you are breaching the confidentiality principle. Now, let us go to the circumstances where disclosure is required or is permitted. Number one, the law says so. Number two, it is required by the law. First one, it is permitted by the law. Second, it is required. The law needs it. For example, during money laundering cases, you might need in the code for the legal hearings and all. It's like an evidence, right? There you need to disclose. Third, you have a professional right to disclose. Example, because you have to comply with the quality control. To see whether you are complying with the quality review of the professional body, you need to disclose. Second, to respond to an inquiry. Maybe a regulatory authority has come and asked you something. You need to disclose them. Third, you are protecting the member's interest in legal proceedings. In the code, you need it. And fourth, to comply with any technical or professional standards, including ethical requirements. In these four conditions, you have a professional right to disclose. Circumstances where disclosure is required are permitted. Okay. Factors to be considered before you disclose this confidential information. You just cannot go and disclose, right? Some factors you need to consider, like whether harm will be caused by the disclosure. You have to see whether all the relevant information is known and substantiated. whether the information is communicated to the right person. For example, if it's a money laundering thing, you cannot go and communicate with the person whom you are suspecting of the money laundering, right? Now, there are some specific examples where you're disclosing confidential information. The most common offenses that members make are in relation to these things. Let's see. Number one, fraud or theft. Here, see, these are the conditions where you need to disclose confidential information. Okay, when there's a fraud or a theft, right? You are, which is including fraudulent financial reporting, or you are falsifying your asset, your accounting records, any other documents, you are misappropriation of assets. In this condition, you need to disclose. Second, tax evasion. Third, money laundering. Fourth, drug trafficking or terrorism. Insider dealing, market abuse, and bribery, and offenses under company law. Under all these conditions, you need to disclose confidential information. These are the examples, which is triggering for you to disclose confidential information. If you do so, that time you're not breaching the confidentiality principle. Remember this. Now, another reason why you need to disclose is public interest. Because of public interest. What is this public interest? First, understand the definition. There is no official definition, but you can use a thumb rule. Okay, what is it? The thumb rule says that if any member of the public are going to incur any kind of physical or financial damage due to your auditor's opinion, okay, then it is said that there's a public interest. Okay, you as an auditor, you know you can prevent this from happening. Okay, you can prevent the physical and the financial damage to the member of the public. Then it is more likely that you are not following the public interest. You're not acting according to the public interest. You failed to act in their public duty. You means the auditor. That is the simple meaning of it. And to know what is a public interest and what is a not, auditor should use some kind of judgment, and they should take some legal advice also to know this is in the public interest or not, whether I should disclose it or not. If I disclose, it will be in the public interest or not. You need some legal advice as well as some judgment auditors need. Next, why do you do that? Because if you do this, if you disclose confidential information, only the sole reason is public interest, you as an auditor, you will be protected from any risk of liability. Later on, if things go wrong, you will not be blamed. Liability will not come on you. You will be protected from that. Okay? Because you have disclosed everything in the public interest. So you have nothing to worry. That's the reason. Auditors are being protected. Now, in determining the need to disclose matters in the public interest, auditors should consider these things. Number one, what is the size of the amount that is involved? When you're disclosing something in the public interest, what is the size of the amount? And what is the extent of the likely financial damage? Second, whether members of the public are likely to be affected by it or not. Third, what is the likelihood of repetition? If something is repeated often, better to disclose it. It's in the public interest. Reasons for the client's unwillingness to make the disclosure. Why the client does not want to make the disclosure? Gravity of the matter. Relevant legislation, accounting standards, and auditing standards. All these things you have to take care before you just disclose it for the public interest also. Even if it's public interest, you cannot say it's public interest, I will disclose. You have to see those things. Consider these things and then disclose. And you have to obtain the legal advice. Now, the second term which we need to know under confidentiality is conflicts of interest. What is conflict of interest? When the same auditor is auditing two companies, and those two companies are either the competitor of each other, that means they are competing in the same market, or they trade with each other. They are either the competitor or they trade with each other. In these two conditions, there is likely to be a conflict of interest. Okay, and this conflict of interest will give rise to two fundamental principles. One is objectivity, because you will not be independent, and one is confidentiality, because very easily you can disclose the competitor's information to the other. You can pass on to your other client, right? Both are your clients. Both the competitors are your client. So objectivity and confidentiality. Therefore, the firm must disclose this nature of conflict to the relevant parties. Both the parties should know that there is a nature of conflict. It should be disclosed, and you should obtain the consent to act as an auditor for both the firm. They both should know that you're auditing for each other. If safeguards are not there, okay, or if a consent is refused, that means you didn't get the consent from the parties to act as an auditor for them. What should the firm do? What should an auditor do? Audit firm do? They must end the service. They should not be an auditor for that client any longer. They should stop it. They should back off because it will result in conflict of interest. You should not be an auditor for that firm any longer. You should not go ahead. Okay. And the same rule applies especially when you are going to accept or continue with the client or not. During that stage, you have to take a decision whether you are going to continue with this client or whether you're going to accept if it's a client is new. If you're already a audit firm for that client, you decide whether you're going to continue with it or not. Okay. Now, the additional safeguard should be implemented. This safeguard should be there if conflict of interest is there. What is it? Number one, if you planned to go ahead and audit both the competitor, you should use separate engagement team for both, not the same engagement team. Okay, and they should be given clear guidance that confidentiality at all stage needs to be maintained. Second, any key judgment needs to be reviewed by an independent person of appropriate seniority. Some senior people have to come who is independent, needs to review the key judgments for both. Third, measures which should be taken to reduce the threat of disclosure. These are the measures that should be taken to reduce the threat of disclosure. Okay, includes, that means there's a chance that you might sometimes disclose the confidential information. How to reduce it? Procedure to limit access to client funds. Okay, no one should have access to the client firm, each other's things. There should be a limit. Second, physically separate the confidential information of the two firms from each other, or you might keep them in a separate building or separate places. Third, sign confidential agreements by the engagement team member from both the team, from both the client, sign confidentiality agreements, and also the auditor. Specific training and communication. Yes, you have to give your auditor specific training for it, how to maintain confidentiality as well as communication, so that they do not disclose it, even by accident. Now, the last part of this lecture, which you have been waiting for so long, the much awaited, the most important approach to your exam question. Okay, so in an exam question, your requirement will be, they will ask you to evaluate the thread. See the verb is very important. What are they saying? They are telling you evaluate the thread. Now evaluation means you need to understand, and it goes in this stage. You need to follow the steps in the same order given. Evaluation means first to identify the thread. Identify the thread means it is causing a threat to what? Is it causing a threat to, is it a familiarity threat? Out of that 5 types of thread, what is it? Is it a self-interest thread, self-review thread, familiarity thread, advocacy thread, intimidation thread? What thread? Second, you need to explain the thread. Okay, we'll see. I have an illustration question for this. Third, you need to evaluate the significance of the thread, whether it is significant or not. Fourth, state actions, which most of the students don't do. You have to give them safeguard. You have to recommend what should be done to minimize the risk of the threat. Example, okay, we'll go through this question now. Let's say audit engagement partner owns some shares in their audit client. Okay, so number one, you identify the threat. What type of threat is it? Very easily you can tell it's a self-interest threat because they are having shares, they are having financial interest in the client, so it's a self-interest threat. Okay, second, you explain the threat. That means if you having a share in your audit, what do? As an auditor, you overlook misstatements. If there is any misstatement, you overlook them. Why? Because if you try to correct the misstatements, it will have an impact on the value of the investment. Value of the investment means it will have an impact on you because your fee, your remuneration is decided based on the share price. Maybe the share value will get affected. Maybe your dividend payment will get affected. This gets affected means it will affect you because you have a share in that company. So you do not want to correct the misstatement. Third, significance of the thread. Is it so? It is significant. Why? First of all, let me tell you it is significant. But why? Don't say this thread is significant, this thread is not significant, this thread is significant, this thread is... That's not the way you would answer. Just say this. You are linking it to the case study. You are telling in terms of the shares. So the shares that audit engagement partner owns have the greatest influence over the audit. Why? Because if how do you tell it has a greatest influence on audit or not? See, the simplest thing, whether it will have an impact on your audit opinion or not. If something causes your audit opinion to change, that means it has an impact, greatest influence. Very easy. If you're owning shares, you definitely are going to give unmodified opinion, even if the opinion is modified as an auditor. Are you going to do it or not? Yes, because you have shares there. So that's why it is going to have a significant influence on the outcome of the audit. Because auditor is the one who is forming the opinion on the financial statements, and your financial statements is going to be misrepresented because of the shares that you own. You are not going to give a true picture. Even if the company is going in losses, you will not show them. You will show them a profit. So because of that, you are going to give them an incorrect audit opinion. Therefore, the thread is significant. This is how you come with an answer. But don't worry, we have two more questions to deal with, thread and the safeguard, in the last of the video. Then the last thing is actions to be taken by the firm. What are the actions to be taken by the firm? The last thing, this needs to be done. This is exactly the same steps needs to be done in your exam also when you're doing an ethical question. For any ethical question, any paper. Okay. For example, this case study, what are the actions you can tell the firm to do? Partner should immediately sell the shares and they should be removed from the audit. Number one. Number two, an engagement quality control review should be performed to assess the key judgments that audit partner has made, so that you make sure that objectivity is not impaired, independence is maintained. Third, it is advisable for the staff and the partners of the firm to be reminded of the code of ethics. All the partners, the audit partners, needs to be reminded of the code of ethics in relation to the financial interest. That means they cannot have a financial interest. If they have, sell it. If they have shares, sell the shares. Okay. And if they have, they need to disclose this financial interest in client. They need to disclose it. And they should not own shares in the audit line. So that's it. So we are over with this lecture. Now I'm going to do two test your understanding. Test your understanding 1 and 3. I have not done test your understanding 2 because it's just similar to test your understanding 1. So I thought rather than doing two questions, I will do one question in a different way. The other question is a little bit different. Okay, question 3. So test your understanding 1 and 3 I'm going to do. One is for 10 marks, one is for 15 marks, and I'm going to show you how to do it. Okay, how you approach the answer. Before I actually summarize everything at the end. So let's start. Test your understanding 1. This is the first question that we are going to do in AAA. So just see the length of the question. In your actual AAA exam, the length of the case study that will be given to you will be bigger than this. Okay, because this is just test your understanding. In test your understanding, the questions are small. Okay, so do not think that in your real exam the questions will be this. The length is bigger, but the nature of the question will be similar. Maybe in your actual exam you will be giving more information will be there, more details will be there. But nevertheless, even this question is good to prepare yourself on how to write a AAA answer. Okay, and these things are kept a little easier. But if you open your revision kit questions, they are more challenging and all. And let's read the requirements and see the number of marks. Comment on the ethical and other professional issues raised. Okay. And recommend any action that should be taken in respect of company A, company B, company C. There are 3 companies that is given to you and it's for 15 marks. 15 marks. So you can take it like when you're allocating marks, maybe you can take it equally, 5 marks for this, 5 marks for this, 5 marks for this, which adds up to 15 marks. Now, you have an option on how to read this case study. Are you going to solve one? Are you going to read one company and then you are going to solve it, or you are going to read the whole case study and then solve one by one? It's up to you. Okay. Normally what I do, how I solve a question is I read one which is, for example, this clearly they have mentioned requirement A requirement. For example, for requirement A, I only need to read this para. Okay, this is para number 2, I can say. This is 1. Okay, because this is regarding this company. Next company is Huggins company, that is in paragraph 3, which I don't need for my requirement A. I can read it later, and then we have gray company. So the good thing in this is you will always see like this. They will give it in different paragraphs. Okay, that makes your things little easier for you to absorb rather than putting everything under one paragraph. Okay, and you have to struggle which one is important. So they have kept it in different paragraphs. And if you see, the requirement also is in that order. Company A, this is in the second para, this is in the third para, this is in the fourth para. So you know which information you need for your requirements. That's solved. The first 3 lines are always there. They are like introduction. That is relevant for all the 3. Requirement A, requirement B, requirement C. You will always see this. They will give you who you are, which company it is, and the year, the financial year end. So you are an audit manager for company Fox and Stifel, a firm of chartered certified accountants, responsible for allocating staff to the following 3 audits. The 3 means ABC for the financial year ending 31st December 2005. If you see all the 3-year companies, clients, they have the same financial year end. Okay. Now, when you're writing this ethical issue, you need to think about that order which I have given you, the 4 stages on how to answer ethical questions. First, identify the thread. Second, explain the thread. Third, significance of the thread. And fourth, recommendations, the safeguards. So the same 4 steps you need to follow in these 3 requirements. Starting with requirement A, I'm only going to read paragraph 2. Okay. So Byte company, okay, the L is silent. Byte company is a new audit client. Whenever you see things like old client, a client for a long term, or a new client, these are triggering words. You need it in your answer. So, okay, so the new is the one, okay, is a new audit client. This private company, what type of company is it? Is it a listed company, unlisted company? Matters a lot. When you have to give safeguard, this thing matters a lot. We went through that table, right? This is a private company in a local manufacturer and distributor of sportswear. Company's finance director, Peter. Who is Peter? Finance director. Always you should mention the name of the key person in your answer. You need this people in your answer. You have to make mention of this people in your answer. Finance director is one of the key personnel. Okay. So the company's finance director, Peter, sees little value in the audit and put it out to tender last day as a cost cutting exercise. Peter thinks audit is not relevant. So don't keep audit. I mean, reduce the cost. It's like a cost for it. But in accordance with the requirements of your invitation to tender, your firm indicated that there would be not an interim dividend. They think interim dividend is not needed, so it's not there. Peter thinks. Now, what is an ethical issue? Before you answer this, I will take you through the answer. Not I'm going to read line by line, but I will show you the length of the answer to have an idea. For 5 marks, okay? If you see this answer, I'm already showing you for A, okay? B, we have not reached to B, okay? You see the A is this much, even big, okay? And you see, what can you see? First, when you start an answer, when you have different companies, make sure that you use appropriate subheading with the reference, which company you are. If there are 3 companies, you have to mention the name of the company. So first it is A and this is the company. That is number 1. Number 2, you always have to write your answer. Always, always, always have to write your answer in any ACCA paper, in fact. This is like a norm. You should know it. You should always write your answer in different paragraphs. That means there should be space. Because now you are doing it on a computer based, you know the space, right? You have to keep a space and then write. So that it shows an importance that you're writing. You are ending a point and you're starting a new point from in a new paragraph. That's the meaning of it. 1 point, 1 paragraph. Now, how much you explain that 1 point is up to you. Okay. The general rule is 2 to 5 lines. Oh, okay. 5 or 6. Let's say 2 to 6 lines. Do not maximize, do not write more than 6 lines in one paragraph. This is the rule which I follow and which I tell my students often to follow, not only for AAA, for other papers also. Okay, when a big question like this is given, you need to break down this information into pieces before you attack this question. Otherwise, you will not be able to do. This question is what? First, understand when you are writing an audit answer, which part of the syllabus is this question from? Ethics. And we know ethical question how to solve. The 4 stages. I will write it here again. Number 1, number 2, number 3, number 4. Identify the thread. One paragraph is this. One paragraph is you are identifying the thread. Next paragraph is you are explaining the thread. Explain the thread. Third is the significance of the thread. How significant is the thread? Fourth is your safeguard. Okay. Now we'll see whether this 4 steps have they applied it in part A or not. If in part A they have applied it, definitely in part B and C they have applied it. It's the same. Consistent. Your answer has to be consistent. Okay. So we'll see now. Okay. Now if you go through A, if you read this, it looks like a lengthy answer. How to solve it? You often panic. Do not panic. If you read this clearly, you know that this one is the first paragraph is they have identified the thread. I will write it. Identification of thread. Now that identification is out of those 5 threads. Remember familiarity, familiarity, advocacy, intimidation, self-interest, self-review. Out of this 5, any 5. It's not always only one thread. It could be more than one thread, sometimes 2, sometimes 3. You have to see all this base. Okay. Second para, if you read, it is what? Explanation of the thread. So this is how they have broken it down, if you see. And how many lines? 4 lines here, 4 lines here, 3 lines here, 3 lines. See, they will not exit more than 5 or 6 lines per para. Sometimes it could be 2 line also. Okay. Very rarely you will see 1 line. I mean, to explain something, it will exit more than 1 line, but 1 line also could be there. Okay. 1 to 5. Third paragraph is the significance of the thread. Okay, I will just rub this thing. Third one is, this one is the significance of thread. Please pay careful attention to this, because if you pay careful attention to part A, if you know once the foundation of writing an answer in AAA, you have understood everything. You have understood the whole AAA, because the way you write answers for one is same for all the questions, no matter what. Maybe the length varies. You might have to write more, somewhere less, depending on the marks, but the foundation is same. You have to write in different paragraphs. How you write it, how you know which paragraph is what, very important. I didn't read the answers here. I'm going to take you through the answer. And the remaining 4th, 5th, and the 6th, all this paragraph is what? Safeguard. There can be more than safeguard. Okay. It's always more than one safeguard only in your answer. You will always get more than one safeguard. But there is no harm if you just get one safeguard. Just write it and go to the next. If you're not able to get more than one safeguard, do not get stuck. Move ahead and do part B. But according to the experience, more than one safeguard only. You must at least 2. You have to get 2 or 3. You don't have to write 5, 6 safeguards. It's not possible. Okay. This should be the last, and this order needs to be followed, by the way. You cannot write safeguard before you write thread. You first have to write the thread, name of the thread. You have to name it. Out of the 5 threads, what is it? Explain the thread, significance of the thread, then give the safeguard. And why it is in 3 different paragraphs? Because there are 3 different safeguards. I told you 1.1 paragraph. Do not mix them. If it's one safeguard, one paragraph. Second safeguard in the second paragraph. Same. Okay. Oh, there is one more. Sorry, there is 7. This is also we have to take. 4 safeguards are there. Now first we'll go through the explanation of the thread. Okay. Understand the question. It's a private company. Okay, they have not taken, they think audit as a cost cutting. They are not putting on to, or what is it, intern audit also. So what kind of thread is it? Think. Just because in the answer they have given intimidation and self-interest. Do not memorize these answers. It will not at all help you in triple. I'm telling you. It's a warning. Huge warning. If you have just started with triple A, do not ever memorize your triple A answers. It is of no help to you. You are not going to get the same case study. You are not going to get the same answer also. You only need to understand how the answer it is. If you understood the concept very well, if you are able to identify the threats correctly, rest everything is easy. It follows. Everything falls in the place. Only the hardest part here is identification of the correct threat. Sometimes you write wrong threads. Confidentiality. Object. No. Just don't write all the 5 threads. Don't start explaining all the threads. It's not important. You don't have to define the thread. You do not have to explain the thread. This is not a knowledge paper. This is a professional level paper. You have to just link it to the case study. Intimidation and self-interest thread. Ask yourself when you're doing self-study. If you are going through this, ask yourself how it is intimidation thread. How is a self-interest thread? Did you understand? If you have understood why it is an intimidation and self-interest thread, clap for yourself because you have understood. You have cracked it. But if you have just reading, doing passive reading the answer and thinking that, okay, it's very easy, I understood. This is how AAA answers are. This is how I need to write. You are not going anywhere. Trust me. When you actually come to write the answer on the exam date, you will be very shocked to know about yourself. So intimidation, why? Because it's a new client. Okay. In the explanation part, you can explain. But for this thing I'm telling you, because it's a new client, okay, you can easily force them. I mean, they have not put any, if just read the case study again, if in case you forgot. It's a new audit client, private company. The finance director itself thinks it's a cost cutting exercise. So look at the attitude of the finance director. Their attitude itself is they do not take audit so seriously, and they have not even put an interim audit also. What does it mean? They can easily intimidate, right? So intimidation thread is there. Or in other words, okay, other way you can do this thing is, if you are not sure which thread it is out of the 5, eliminate the incorrect ones. First eliminate the incorrect ones, then you can work with the confusing ones. For example, confidentiality. Will confidentiality thread come here? Nothing to do with confidentiality. Objectivity. Sorry, objectivity is not a thread. I'm sorry, I got confused with the fundamental principle. You see, this is the very reason. Okay. Even confidentiality, sorry, that is a principle. It's not a thread. I'm sorry. What is it? Self-review. Self-review will not come here. Self-review means you are checking your own thing. Self-review thread is out. What is left? Familiarity. Familiarity will not come. He's a new client. Familiarity is out. What else? Okay, I will write it here. Part A, self-review. Out. Familiarity. Familiarity. Out. What else is remaining? Self-interest. Advocacy. And intimidation. Self-interest, he will have self-interest. Why? Because see, when a finance director is telling you, okay, and he's a new client, okay, when the finance director is telling that audit is not, if audit is a cost-cutting exercise, okay, and also they are not putting so much of attention to audit because intern audit is also not there. They might have some interest there, right? Some interest they might have. That's the reason why they're doing it. So self-interest thread is there. Maybe the auditor. Okay, this is from the point of auditor we are talking. See, whenever we talk this threads, it is from the point of auditor always, not from the company or the finance director. Why? How auditor will have a self-interest thread? Maybe their fee. Their fee might be dependent. Maybe they might lose this client out. It's a new client. They might lose this client if they do not listen to what the finance director is saying, the auditor. So it's a self-interest thread is also there. Advocacy, no, they're not doing anything to advocate or representing the client or anything like that. Next, intimidation. Yes. Easily the finance director can intimidate the auditor. Auditor is at a risk, right? So these are the two threats. That's what first paragraph says. Intimidation, self-interest threat. To what? To objectivity. Which fundamental principle? You have to link this to the fundamental principle. Remember the 5 fundamental principles. Out of it, not all, 1 or 2 will be in your given this thing. And this is objectivity. Objectivity means you are biased, you are influenced by the finance director. The auditor is influenced by the finance director, by Peter. That's why objectivity. Can you write confidentiality? Okay, here also we'll do the same thing. List all the 5 principles which eliminate the incorrect one. This will take a little bit time, but with experience, with practice, you will be able to quickly tell which principle it is. But at initial stage, eliminate the incorrect ones. Confidential, no. They have not discussed anything about disclosing or anything like that. Then comes professional behavior. Nothing to do with professional behavior because they are not doing anything which brings a discredit to a profession. This is also out. Then comes integrity. Integrity also will not come into the picture. It is being honest and all those things. Objectivity, yes, because you are being influenced. The auditor is highly influenced or likely to be influenced by the finance director. So objectivity comes into the picture. And professional competence and due care also will come. We'll see how. So threat to objectivity may be created as audit was put out to tender as a cost-cutting exercise. Explain from the case study. You need to link like this. Just saying it is an intimidation self-interest threat to objective it is not enough. How it is created? From the case study you have to take like this, that they may be created as audit was put to a tender as a cost-cutting exercise. That's the reason. Also, there's a threat to professional competence and due care. What is professional competence and due care? You have to update. You have to be always updated. Okay. You are expected to be someone who is doing the diligently you are auditing, not carelessly. That means you have to take audit seriously. Audit cannot be a cost-cutting exercise. As a professional competent auditor, you are supposed to have audit. So professional competence due care. Second paragraph, explanation. This, it will differ from student to student the way they differ, the way they explain. But understand the main explanation. What is it? When you explain, you have to mention Peter also. Because who is pressurizing whom? Peter. In this case, it is Peter. So mention about Peter. Peter may have applied pressure. Okay. For any question, it is like this. Who has applied pressure over whom, or who is telling whom to do the incorrect stuff? I mean, they're unethical. So don't just write this is unethical, Peter is doing wrong, they should not. Don't write like this. Avoid this kind of sentences. Okay. That's why I'm taking you through this answer before I start writing my own answers. So Peter may have applied pressure. By how? Just writing he has applied pressure over the auditor is not enough. How they have applied that pressure, you need to explain in the explanation stage by stipulating that there should not be an interim audit. You see, in order to reduce fees. Why? Because he want to reduce fees for the auditor. Because if he thinks interim audit is there, doesn't he have to pay fee to them? And he thinks audit as a cost-cutting exercise. To reduce cost, he wants to cut on audit. So you got that main idea, right? This is the main thing you need to explain. By not allowing interim audit, in order to reduce fees, he can put pressure. One point is that from Peter. Second point, you need to explain from the audit firm also. It's not important just to say he will put pressure. Okay, he will put pressure. What about the audit firm? So second is audit firm. What it means for audit firm, you need to explain. From both the sides, you need to explain. This could mean the audit firm does not obtain what? Sufficient appropriate evidence to form an opinion, audit opinion. He cannot form an appropriate audit opinion. Why? Because he does not obtain sufficient appropriate evidence. He cannot have that. Why? Because if you're not having an interim audit, okay, if they want to reduce audit, they think audit as a cost. How can you get an appropriate audit evidence? From whom? You need an internal audit. Interim audit has to be done so that you can get some evidence for the external auditor. So they cannot give sufficient audit appropriate evidences. This is something which is not there in your case study. Everything you will not get in the case study. Okay, you have to use your little common sense also. That if this thing is not there, why auditor comes to form an audit opinion? So you have to link everything there. Will they get sufficient appropriate evidence or not? They will not get. Third, significance of the thread. Explanation part is over. So this is over. This is over. Come to the explanation. Is it significant or is it likely to be significant? In this case, the threads are unlikely to be significant. First, write unlikely or likely, then say why. When you say why, link to the company, not your knowledge, not your textbook knowledge. You're dumping here. You see now how you are linking your answer with the case study? You're using both. You are not using entirely the case study or entirely your knowledge. Will not help you. So the threats are unlikely to be significant as the company is a small new audit client. You see, the company is small as well as a new audit client. How do you know it's a small? It's a private company, it's not a listed company. Look, telling the word private means it's a small company. Or you can even write it's a private, does not matter. New audit clients, a new audit client. New audit clients are very unlikely to be significant. They cannot put pressure on the auditor. But if they are big, major established company, the client is established client, a big client, yes, they can put pressure. How? Through the fees. They might cut the fees, they might not give the fees to the auditor. Auditor might be forced to listen to the client, but in this case, the client is a new audit client and is a small. So he cannot influence the outcome of the audit in such a way, the client. That's why this is not so significant. Now we are coming to the safeguard. 4 safeguards are there, one by one we'll go through. When you're writing safeguard, you need to think a little practical and little think from the case studies point of view. What could be the safeguard rather than writing all those lists that you have went through. But you need understanding of those lists as well. Especially if it's a listed company and for those things. Some provisions from some things you need from the table that we just went through. Okay, so let's start. Senior staff that is assigned to the company. Okay, one safeguard is this: they should be alert to the need to exercise a high degree of professional skepticism. Now you are saying, whenever you're saying something, use this kind of words. They should, they have to, they must. Why? Because you're telling them what they have to do. Safeguard is basically it's like an action. This is the action you have to do to solve this issue. This is the action in this condition you have to do. This is the safeguard you have to do. You're recommending. That is the meaning. That's why I use these words. This company should do this company should do this. So this company, what should they do? They should have a high degree of professional skepticism in the light of Peter's attitude towards the audit. Why? Because Peter's attitude towards the audit is negative. He does not want auditor, he wants to cut down the cost. So in this case, what should a senior staff do? They should pay more attention and they should exercise a high degree of professional skepticism. What do you mean by professional skepticism? Do not accept everything what Peter says. Challenge them. Is it correct or not? Check. Do not just blindly trust whatever they say, because they are not taking audit in a favorable light. So this thing, textbook will not explain you. It's not there in the textbook. We didn't go through it. That they should exercise professional skepticism. This is something that should come from your practical understanding of the scenario. Understanding. Just think practically, what would you do? You will become more cautious about that person, no? Someone who is negative. You will doubt that person more. In real life also. In any scenario, forget about audit. When you know a person has a negative thing towards certain thing, you become more cautious. You do not accept or trust everything what the person says. He might be hiding things or he might be lying to you. Same thing for the audit, apply it. Same knowledge, right? Second point, the audit senior, whoever the auditor is, they need to be experienced in standing up the client management such as Peter. Whoever is there, see all this thing, all this answer is made up because of the case studies is in such a way. Because Peter is in such a way, that's why you are coming with this type of answers. You cannot link it to your the knowledge, the textbook that you went through. Because Peter is kind of not so much supporting audit. So in that condition, if any auditor comes, he needs to be very experienced to stand up against the client. He needs to challenge. Personality has to be such a way. Okay. Otherwise, easily he will get influenced by P2. Third safeguard. I told you, when it's a new client, listed company, a private company, public listed, all this thing, whenever they say what is the form of the company, needs to be mentioned in your answer. Somewhere it is, you need it in your answer. So I told you it's a new client. Because it's a new client, what can happen? Think about the auditor. From the auditor's point of view, when it's a new client, risk is more or less? Risk is more. What type of risk is it? Name it. Detection risk. We still didn't go through detail what is this, the detection risk, prevention risk, all those control risks, but we'll go through later in the slides in the lecture. But understand, when the client is new, detecting the risk is high. You cannot easily detect. The risk is more there. Why? Because the auditor does not have cumulative audit knowledge. When you're working for the same client over years, you know the client better. You know what type of risk it is. You have a cumulative knowledge. You have an experience with the same client over 3 years. For them, he's a new client. How will you know? You do not have any backup experience with this client. So risk is higher. Okay. So because this risk is high, I'm sorry. This is not a safeguard. The sixth one, it is just a risk. For overcome that risk, the seventh is the safeguard. Okay. So an engagement. So because that risk is high, what should you do? Engagement quality control review partner. This you have went through several times in the safeguard, right? There are so many types of risks, so many threads were there. Most of the safeguard was this only. Engagement quality control review should come and review. Engagement quality control should come and review. So this you can use it here also, right? They should be assigned to address the increased audit risk. Because audit risk only, right? Detection risk increase means audit risk will increase. If audit risk increases, hire them. It's a safeguard. Now, I think you have got a proper understanding of part A. This makes your AAA answering very easy. It's not at all hard. Don't take AAA very difficult. It looks very difficult from outside. When you go deep inside, it becomes very easy. Trust me, you just need to break that big piece of ice into small, small thing before you handle. That's how you handle, one by one at a time. You know, when you're having a cake, you don't have the entire cake, one piece at a time. Same way, when you're writing an answer, building up an answer, especially at the initial stage, later stage, you are like a pro. You can write at great speed. You know what to write. You know the structure. You know what to write. You know how to start, how to end, what should be in the middle part, which paragraph, how many paragraphs, for how many. You will know it. You don't have to ask anyone for it. It comes through experience. It comes through your own this thing. You need to keep writing answers. But initial stage, you need to do a lot of planning and it takes time. Planning takes, in fact, more time than actually writing the answer. But you need to sit and write this answer on your own. You need to type it. If you do not, you will not understand how much time you are taking. Maybe you have understood everything, perfectly wrote it. But time management is also very important for AAA. If you are lagging behind time, writing beautiful answer is not worth. Okay, so practice it on your own. Coming to part B. Okay, now read it. We'll read it. Part B. Hagen is a long-standing client. He operates a national supermarket chain. Your firm provided with a corporate financial advice. Okay, that means you have to give them corporate financial advice on listing on a recognized stock exchange in 2004. Senior management expects a thorough examination of the company's computerized system. What should they do? Examination of the computerized system and also seeking assurance that the annual report will not attract adverse criticism. Got an understanding? No. Which type of risk threat will come? I'm not going to put that table. Very easily you will understand self-interest threat is there. Why? Company is listed. Company is listed. When company is listed means what? Self-interest threat is there. We'll explain it later. What is the next type of thread? Okay, there is more than one thread. Sometimes if you have more things to explain under a particular thread, put it under different subheadings. Like in part B. Part A, if you see, everything is under one, intimidation and self-interest. Because not much to explain also. Maybe everything you can explain in one paragraph. But here, you have more to explain. That's why it is in separate paragraph with separate subheadings. Self-interest has itself 3 paragraphs dedicated to it. Then next is familiarity. We all know because long established means over the long year means familiarity thread will come. And self-review. A lot of the times you are giving the service and you're auditing also. So self-review. So these are the, oh yes, intimidation thread. Oh, you see. So almost all the threads are here in this company, which is not a good company, I would say. Okay, which thread is left? I think everything is this self-interest, advocacy. Advocacy thread is left. Intimidation. How? Listed company, they can easily intimidate, put pressure on the auditor. Okay. So first we'll explain one. And here also, same things you have to do. When you are writing self-interest, identify, explain the thread, significance of the thread. And here is the safeguard. Maybe one safeguard. Okay. Same way for the others also. Familiarity, self-review, then intimidation. But some has more. If you see self-review, it has more to write than other threads. Okay. So it's a self-interest thread. We know that. Identified correctly. Okay. Why? Because it is listed on a recognized stock exchange and company. Okay. They may give that company a prestige and a credibility also. It will give the company a prestige and a credibility also if you are in that company, auditing in that company which is listed on stock exchange. So it will give a self-interest thread because you have some kind of interest there. Second, explain the thread. Who is pressurizing whom? So Fox and Stifel could be pressurized. Here also could be pressurized. You see, the word pressurized is often repeated into overlooking the material misstatement to avoid the loss of a listed client. Right? You will be easily be pressurized. That means you, the auditor, you will easily be pressurized that if material misstatements is there, don't look them because it can lead to loss of listed client. You can lose your client if you do that. Always think this from the point of auditor. What is the impact in the financial statement, the audit report? Same like part A. This may result in firm issuing an inappropriate opinion on the financial statements. Inappropriate opinion. You cannot give an opinion. Opinion will be inappropriate. Why? Because you are overstating the mistake. You are overlooking the material misstatement. You're not taking care of it. You're not correcting it. So whatever opinion you give will be inappropriate. Significance. Is this significant? Think it's a listed company. The bigger the company is, the more significant the risk is. Yes. Here, engagement fee may be significant. And the company may not wish to do anything to risk losing the client. So the company wants to keep this client. They do not want to risk losing this client because their engagement fee will be very significant. Compared to part A, you see, it was not so significant because it was a small company. New client. Here, it's not like that. Part, the last one, safeguard. When you're talking about this, it's a listed company. You're talking about engagement fee. Which safeguard can you give? Talk about fee. There are so many multiple safeguards for self-interest thread, but we do not care about anything. When it comes to shares, when it comes to listed company, talk about the fee level. Simple, easiest, because you can write on this. So the fee level should be monitored. You have to monitor the fee level. Why? To ensure that the fees from this company do not exceed the level set by the relevant ethical guidance. What is it? What is it? Here you need a little bit knowledge of your textbook. What I have just went through the lecture. One is for international, one is for UK. For UK, ignore because you are given the international version of AAA. I'm sure no one is giving a UK version here. The people who are in UK are giving the UK version, but that's not my concern because I am teaching you the international version of AAA. Okay, I'm sorry, the UK people, you need to, if you're watching this video, you need to study the UK version on your own because I'm doing the international version of AAA. The figures are different. I have completely avoided the UK version. I'm not teaching it. Wherever UK version is, they have left it out. Okay. And the students who are doing the international version of AAA does not need to look what is there in the UK version. It's not going to come for you. Okay, you can leave it. You only have to focus on the international version. So according to international version, this figure is given 15%. This is why you need to memorize if figures are there. 15% of the firm's total fee income for the 2 consecutive years. It should not exceed this level. This is only for the listed entity. We are talking about this 15% because it is listed entity. That's why you need to know what type of company it is. It is a private company, public company, listed company, new company. What type of company matters a lot in AAA when you're auditing. Now we are moving on to this next, familiarity. This is easier because you know it's a same engagement partner you have been using for a long period of time. Okay, and which is now a listed entity. So this is something easy. First paragraph, second paragraph. Explain. They may lack professional skepticism. The audit firm may lack. The auditors might not have the professional skepticism. That means they might not challenge their client because they know them for a long period of time. So because of that, they fail to detect material misstatement. Always look for those words: impact on the financial statements and whether they can detect or not detect material misstatement, or what is the impact on the auditor's report, the opinion. These things you can write when you are explaining. When explaining, always. So for audit firm, they will fail to detect material misstatement. What is the safeguard? This is the safeguard. Here they didn't explain you the thread, because significance of the thread, if you see in some, they have not written it. Now I don't know the reason why they have not written it or anything, but maybe because it is significant. Familiarity thread, I mean, it is understood that you don't have to explain it because it is a long established client. So, or maybe they have nothing to explain on that, so they have left it out. If you are in such a position, guys, where you cannot explain certain things, you failed. For example, before going to fourth paragraph, third paragraph is what significance of the thread. You are not able to explain it in words. Leave it. Just go to the safeguard and write it. It's okay. Okay. Don't keep waiting to finish the what is it, significance first and then write safeguard. Sometimes you will not have the time to do it. Just leave it and go to the safeguard and finish it off and go to the next one. That's should be your approach in AAA. This is again, because it's a listed company, you have a little understanding of this from your textbook lecture. Textbook means I have covered it in my lecture, so you through my lecture you will get it. You don't have to read the textbook again if you follow my lectures correctly. The engagement partner should be rotated. This is about rotation. When we talk about familiarity, rotate. Engagement partner should be rotated after predefined period. What is it? 7 years if it's an international version, and UK 5 years. UK we don't care because we are giving the international version of AAA. But UK people, if you're watching my video, you have to take 5 years. Self-review thread. Obviously, they are giving the service and they are only checking their own. So it's something which is easy to explain. Why here self-review thread is there? Because audit firm is giving non-audit services also, which can affect the financial statements. Okay, they are giving assurance over the computerized system. So this is identification. Now you explain. How do you explain this thread? Auditor, they are unlikely to identify errors in their own work. Can they do that? Because it's, if you are reviewing, you cannot correct yourself. You will not identify your error. Even if you do that, you will not admit it. Unlikely to admit your own error. Who does it? Audit is the same. Third, significance. This thread is significant because Hagen is a national chain and also a listed client. Okay, so if it's a listed client and a national chain, remember their reliance will be placed on the systems by the auditor. System is matters a lot. Computer system and all matters a lot. They're going to place heavy reliance on it. Now give the safeguard. There are two safeguards here. Safeguard number 1 and 2. Okay, this is one only actually. Both are in the same paragraph, but I think it came in the next line because of my copy and pasting. Anyway, because this is listed, always mention why something needs safeguard. If you are telling for a safeguard, say this: because this is listed, because this is a private, because this is a new client, this should be done. Okay, so has Huggins company is listed. Okay, what does for listed company, what do they say for the IT, sorry, not IT, yeah, IT system was there, right? One of the thread is IT system. The examination of the computerized should not be undertaken when, if the system relates to financial reporting or internal control, because this thread would be too significant. If it is over financial reporting, okay, that system relates to financial reporting over internal control, you cannot undertake it. But if it does not relate to financial reporting or internal control, you can give that service, but separate teams should be used for each service. And the team that you are assigning to the system examination, the one who is going to examine your system, they should have appropriate skills. Now we are coming to the last thread, intimidation thread. Here, how is an intimidation thread? Because as Huggin Company seeking assurance that annual report will not attract adverse criticism, the line itself says it's an intimidation thread. Explain this thread. Management, they might put pressure on the auditor to allow them to omit disclosure. That means you do not disclose everything. Managers might pressurize the auditor because they do not want to have adverse criticism. They want to avoid it. What should be the safeguard for it? Team must be aware of this risk and apply sufficient professional skepticism when perform the audit. They can go ahead with the audit for this, where you are giving the assurance also. But you should use a professional skepticism. Question, challenge. Do not accept everything on the face value of it. Coming to the gray company. Gray company has been an audit client for 7 years. After your firm advised management on a successful buyout, they have already advised. Gray company provides communication service and software solutions. Your firm provides with technical advice on financial reporting and tax service. You see, other than audit, you are giving non-audit services also like tax service and finance. These are thread. Most recently, you have been asked to conduct due diligence also. Due diligence reviews on potential accusation. You have been asked to do multiple things here. We'll go one by one. So for here, identify the thread. Familiarity thread, definitely, because 7 years. First, identify the thread. Next is self-review. Yes, because you are giving services and you have to audit also. These two are very easy. Next is you are assuming management responsibilities. Management thread is another thread, which I told you could be a 6th type of thread other than those 5 threads. Okay. First, we'll go through the familiarity thread. Okay. You know it's a client for 7 years. Familiarity thread is there. Because of this, what happens? Explain. Partner may become complacent and lack professional skepticism. You will not question your client. You become very complacent. You are not very much aware also what could be the risk. Because of this, what happens? Professional skepticism means you are failing to challenge the client. But if it was a new client, you would definitely have challenged. You would have doubted that client. But because it's an old client for 7 years, you are being very comfortable with them. What about the thread? This thread is not significant at this time. Even if you're familiar with someone, does not mean it's a very huge threat. It's not significant at this time, but still, safeguard would be you can appoint an engagement quality partner, review partner, so that in the future, okay, the audit is being performed with sufficient professional skepticism in the future. Coming to the self-review thread, okay. First is one by one we are going to talk about. First one we are going to talk about is what? Technical advice on financial reporting and tax service. This were mentioned together. So together you can explain. Rather than putting separate, this is a self-review thread, tax service is a self-review. Don't explain like that. Both together you can write. Both have been mentioned together in your case study. So giving technical advice on financial reporting as well as tax service. And also a due diligence was requested. All this gives rise to self-review thread. All three together and write that it's a self-review thread. It's better to write it in one paragraph and save time rather than writing 3 separate sentences in 3 separate paragraphs and saying this is also self-review thread, this is also self-review thread, this is also self-review thread. Avoid it. Second, explain that thread. Auditor, okay, because they audited the financial statements, okay, they will be auditing the financial statements that have been prepared based on the advice of the firm. Who has advised? Auditor has advised. Based on the auditor's advice, they has prepared. And therefore, because of that, they are reluctant to criticize. Auditors will not criticize the accounting treatment because they are the one who have given the advice to the firm, to the client. Do they want to criticize their own accounting? No. Third, significance. Is it significant? It depends on the nature. Significant, sometimes you cannot write whether something is significant or not. But sometimes when you're writing significance, you can write that significant is dependent on this factor. That's how also you can write an answer like in this one. threat may be considered significant depending on the nature of the advice. What is your nature of the advice? See, when things are qualitative, you are giving advice to something, you cannot say it's significant or not. You cannot say it like that. There you can use this line depending on the nature of the advice and the tax service provided. But remember, however, as grey companies not are listed, they can still provide these services with safeguard applied. Remember, if you are listed, you cannot provide these services. But if you are not, because this company is not listed, you can still give the services based on some safeguard. Now that safeguard will be there in the last paragraph. You see, every answer has the safeguard in the last paragraph. This makes your work easier. Your brain will be able to catch a pattern. Always try to have some pattern in your answer. If you know that for ethical question, this is the pattern, you will automatically easily next time an ethical question comes, you will know, okay, first let me identify the thread. Second, let me explain the thread. Third, let me write the significance. Fourth, let me write the safeguard. If you know this 4 steps, then you know you are halfway there. But for other questions, we have others, but always pattern is there. You just have to identify that pattern. And most of you are not able to identify that. That's why you struggle for answers in AAA. And this is, mind you, this is just not for AAA. For other papers also, you have this kind of trend, which I was able to identify at a very earlier stage, which helped me a lot to pass the papers in the first attempt. I used it in ATX, in EFM, in SBR, in SBL. It's the same thing. Once you read so many answers, you know that there is always a pattern behind. There's always a reason behind why certain thing is in certain order. So what can you do? Remember, it's a different. When you studied, what did you study? When you have to give additional services, use separate teams to give that services. And each team must have skills and competence also. For example, the one is giving tax service should be tax competent. The one is giving financial reporting, they should have that. Okay. And also, the audit team of the company will require staff with experience in financial reporting matters, specific to communication and software solutions. Because you are in that line, right? They have given some examples. What is it? Like example in revenue recognition issue and accounting for internally generated intangible assets. This they have not linked it to the case study. This they have given as an example. They have given anything. You can give anything as an example. Revenue recognition is something which is very easy. Automatically it comes as an example so that you can write, and maybe internally generated intangible asset. Because why? Because this is software solution, communication, looking at the nature of this company. They are not having non-current assets. They are having intangible assets which you cannot touch. So internally generated intangible assets, they have not acquired it, they have not purchased it from somewhere else, they themselves have generated these assets. That's why they have told accounting for internally generated intangible assets. Audit team should have experience in these things, looking at the nature of the business. Now we are coming to the management responsibility. This was not there in the other two. So if you see all this advice that you have to give, it is more like the management's responsibility rather than you are the auditor's responsibility. So they are acting in the capacity of the management. Okay. If the advice provided is acted on without any consideration of their management, you have to take the consideration from your management, the company's management. It is the management's responsibility. They have to give advice, not the auditor. Now they'll link how. Activities such as authorizing transactions, when you have to authorize transactions, when you have to take responsibility for preparing and fair presentation of financial statements, for taking responsibility for designing, implementing, maintaining internal control. You see everything they've given in one paragraph, because all these things relates to one thing, that they are management's responsibility. When there are too many points which is relevant to one thing, which means all are management responsibility, you can write all them in one paragraph rather than writing in separate paragraphs. That a responsibility for preparation of financial statements is management responsibility. Designing internal control is management responsibility. Authorizing transaction, management responsibility. Rather than repeating it like this 3 times and wasting time, put everything and then write is management responsibility. Isn't it easy and it saves time? Saves much time. Or determining journal entry. They should not be performed without. See, this is safeguard. They should not be performed. Whenever you see the word should, have, they should, they have to, they must, it means it's a safeguard. You are recommending something, actions. Okay. So they should not be performed without obtaining Grey company's approval and the acknowledgement that they are ultimately responsible. Who is responsible? Grey company's management. Grey company is responsible. First, you have to get their acknowledgement that they are ultimately responsible. They have given you the approval, then only you can give these advices. Then only you can give the services. Otherwise, no. That is a safeguard. Now, that's it. Your answer is this much, but for your understanding purpose, let's go through the tutorial note. These are like general matter that affects this company. What is it? If you see, all the 3 assignments have the same financial year end. So when you're giving you have to carefully plan when you are resourcing, but how much resources needed for each 3 audits. And for again, because it's a listed company, they will have the tightest reporting deadline. The time you have to report will be the tightest for the listed company. They're very tight, very strict. And time budget, how much time you have to give for each assignment, how much manpower is required, and you have to schedule the audit work. These are some general matters that can affect this company. Okay. So that's it for test understanding 1. Now we are going to go test understanding 3. I'm not doing test understanding 2. It is similar to test understanding 1. Rather, what I would suggest you is, on your own, try test understanding 2 and check how much is your progress from test understanding 1 to 2. How much were you able to identify the thread, explain the thread, identify the significance, and give the safeguard. Check it on your own. That's the greatest way to test yourself. Rather than just seeing my video, me solving the question, you do one question on your own and test. Okay. And now I'll be doing test understanding 3 because it's a bit different. Okay. And when you do the questions, please time yourself. It's a 15 marks question, so 15 into 1.8. From your early stage, you need to time yourself. Don't be lazy and thinking, okay, later we'll time it. Now it's just the first question. No. The way early you do, the way better it is for you. 15 into 1.8 is how many minutes? 27 minutes. You need to spend 27 minutes here. Test understanding 2 is also 15 marks, 27 minutes you have to spend. Okay, so now let us go to test understanding 3. Test your understanding 3. In test your understanding 3, part A is just a knowledge question which says explain the importance of role of confidentiality to the auditor-client relationship. This you can use your textbook and answer it. It's worth 5 marks. Okay, which I'm not going to do because my focus is in part B, which is for 10 marks. Here, comment on the matters that you should consider in deciding whether or not your audit firm can comply with Rosella's request. Okay, so in this case study, what's happening is Rosella is making some request. She's making 3 requests here. And your audit firm needs to see whether you can comply with the request or not. Let's read part B. Your firm acts as an auditor and advisor to Black 7 and to its 4 directors. The company is owned 50% by Brad Capella, 25% by his wife Minerva, 10% by Janus. Brad is the chief executive and Janus the finance director. Janus' sister Rosella has recently resigned from the executive board following a disagreement. Why did she resign? Following a disagreement. It's very important that you know the reason why someone has resigned, because later on you can use it as a evidence for your answers. Okay. Rosella has now formed her own company, which is known as Black's Heaven. Earlier, she was an executive management in Black 7. Now she resigned and opened her own company known as Black's Heaven, which is in competition with the Black 7. So do not get confused between the 2 companies. One is Black 7, the other one is Black's Heaven. Okay. Rosella is currently negotiating with her former co-executive. Okay. The profit related remuneration that is due to her. She's negotiating. And the sale of a 15% holding of shares in Black 7 to one or all of them. Rosella has contacted you to find out the Brad's current remuneration. Okay, she wants to find the Brad's current remuneration package since he refuses to disclose this to her. Here itself you can see that it's an issue, right? See, when you read the case study, you can automatically identify what are the issues. It's there. That's why when you're reading it in your CB platform on your computer, right, you need to highlight it. There is one tool which is known as highlight, which I will show you when I do a question on CV platform. Okay, I will be doing revision kit questions on AAA for the December session, because as I promised earlier, I'm going to cover AAA for the December session, not for the September session. So after the September exam gets over, I'll be focusing on the revision kit questions only. Before that, I'll be doing lecture. Okay, but here you need to highlight it, the important things. Otherwise, you will forget what is an issue. Later, you need to build up on it. Okay, using your answers. Last but not the least, she has also requested that your firm continues to act as a personal advisor and becomes an auditor and advisor to Black 7. Okay. One is, we'll see what are the three, the request. Okay, I'm not going to read the answer, that you can read on your own if you have the textbook. Okay, my thing is to explain the answer. What are the important things that needs to be there? If you can read A. Okay, so these are the three requests. First, identifying the what are the requests is very important. Once you identify the request, you will be able to explain each of the three, whether you can comply or you cannot. That means your audit firm. First request is you disclose the remuneration level of the former executives level. Second, act as a personal advisor. Third, appointment as an auditor and advisor to Black 7. These are the three requests Rosella has made. Now let's see, starting with the first one, disclosure of remuneration package. What do you think? Automatically you will think that, that it's not right. They should not disclose remuneration package. But remember, if AAA was so easy, if you can just write that one word, remuneration disclosure package should not be disclosed, things would be very different now. I mean, AAA is not that easy. To come to that answer, you have to build up so many points. You just cannot immediately write it should not be disclosed. It's unethical. Auditor, it is breaking the confidentiality principle. No, you cannot write like this. That is a way of writing AAA answer. And you have to write it in terms of audit, what the terms that you have studied there. You just cannot write general answers also in AAA. It looks like that in the beginning. Okay, when students come to me, they think AAA, everyone takes AAA thinking that you can just write general answers, whatever you think from your understanding, because you are working. It's not like that. It's not at all like that. It looks like a remuneration package. Okay, student often panic that maybe they just have to write everything about remuneration package. Here the thing is from the point of the auditor, whether they can disclose such things or not. For to know that, you have to know what are their duties, what are their ethical duties, what is the impact if they do that, what are the things, what are their roles and responsibilities. You have to know it. Okay, if you see the answer, it's quite big enough. I mean, and it's for 10 marks. Okay, so and the 10 marks will be allocated. You cannot say equally among the three requests. Sometimes more for particular request, maybe less for the others. Okay, it depends, but we'll see. Usually they recommend one is the biggest, the request one, if you see the answer. Okay, here also, as you have seen in the test understanding one, they have break down into several paragraphs, but there things were easier. It's an ethical issue. You identify thread, explain the thread, explain the significance, and then you give safeguard. But what about this question? This is very open-ended question. How do you answer this question? If I ask you this thing, how do you start? What are the things you need? How do you end? This are very important question, and ACCA student should ask very early in their journey. How do I start? What I write in the middle part, and how do I end a question? If you do not know the answers to these three things, my dear, you will struggle a lot. Reading answers will not at all help you. Please don't read answers. You can read answers to check your answer later on. It will, but just reading answer will not give you any value. You will be thinking, fooling yourself, okay, I know everything looks easy. See, when you read the answers, it looks very easy. But when you come and sit to write, you will not even get those points also. You cannot even get the easiest points also. That's the nature of the paper. You cannot help it. Even if you have studied so much about the ethical responsibilities of the auditor, they should not disclose confidential information. When you come to write, you cannot write anything. That's all. That too for 10 marks. You blunder your answers. Trust me on this. That's the biggest reason why AAA is the hardest paper. Pass rates are very low. Students failing. Even they have the absolute, the perfect knowledge of AAA, they still keep failing the paper, because AAA is not just knowing all the rules, regulations, terms, conditions, what auditors, their way the report. No, the way you are able to write your answer in AAA. That's what will make you, that's what make a difference between a passing and a failing candidate. Remember, even if you don't have so much of knowledge of AAA, if you are able to write an answer properly, you are in the age of passing. You have a high chance of passing AAA. Get this right straight away from the beginning of your ACC AAA journey. Okay, I'm not going to read the answer, but just tell me some basic points. First, you have to have a structure in your mind. You need to have set that structure. That's why I'm taking a bit more longer time rather than just reading answer and telling you, okay, write this, write this, write this will not help you in the long run. If a similar question comes like this, you will not be able to do it on your own. I want you to be confident and able to do a question on your own rather than just relying on my videos for an answer. Yes, you can use it as a feedback or later to check what are the things that went wrong. That will be more better rather than just sitting and just watching my videos and just me solving that question for you will not help you. Because I can solve a question in many ways. Trust me on that when I'm telling you this thing. I can solve one question in many different ways. You cannot do that. For you, you have to do the easiest way. And to know the easiest way, you should know the answer. Okay? You start with what? Auditor's duty. What is auditor's duty? Ethical principles. What is the ethical principle? See, there are two ways. Okay? One, looking at the case study, you can identify that this is more linked to the confidentiality compared to the other four principles. Okay, you have to link your answer to the five fundamental code of ethics, the five principles. That is your first thing. Objectivity, confidentiality, professional competence, duty, professional behavior, integrity. Out of this, I have choose one. In this case, it is confidentiality. How do you know that? Because it is more like disclose. See the term disclose. They're not disclosing. This words will trigger that it's confidentiality. You see, sometimes from the question you will get an answer. Look at this word. I will take your troops. He refuses to disclose. This word is giving you a hint that it is confidentiality. One way is this. The other way, okay, it is a more smarter way and quicker way also is look at your requirement. If you have more than one requirement A, B, C, D, check your requirement A, because usually what happens is your first requirement, they will always start with the easiest, the knowledge based questions like 5 marks, 3 marks, 4 marks, 6 marks, like that. They will always start with the easiest. That's how exams are set. They will not immediately start spamming you with the hardest question. Do this, do this, no. They will initially set that stage for you so that you become comfortable with the subject. A. From there itself, you will get an idea what is for B. Okay, here, explain the role of confidentiality. The word confidentiality tells you that even in part B, they will check that in a bigger level, in an advanced level. But it's not always. Sometimes more than that also will come in part B. But at least you are sure that confidentiality is there in part B also. This is one way of testing. Okay, and the word disclose, it makes it more prominent that this is this thing. Okay, because if you read it, it does not make any sense. It does not say anything unethical. You cannot say objectivity because it is not being influenced by anyone. You cannot say integrity because they are not doing any dishonest ad. You cannot say professional competence and UK because it does not say whether they lack experience or anything. You cannot say professional behavior because they are not doing anything that is becoming discredit to the profession. For example, crime or money laundering or anything. So only one thing is left is confidentiality. Understand the ethical principle. Okay, if you understand this, so that is the first thing that you need to identify. Confidentiality. Auditor owes a duty of confidentiality to whom? You have to write words like this as it is. Auditor owes a duty of confidentiality to the client. You need to know who owes a duty to whom. You have to write auditor owes a duty of confidentiality to the client. Like this you have to write as it is. Okay. And when you're saying to the client, make sure it is not, it is to the company as a whole, not to the individual shareholders or executives. You have to write it. Why are we talking about this specifically as a starting point? Because he told no, he wants to disclose information regarding remuneration. the Brad's remuneration, right? Brad is just an individual. He's just an executive. So auditor does not owe a duty of confidentiality to Brad, only to the client, company as a whole. That means they have to protect the confidentiality of the company as a whole. They do not owe that duty just to one individual or one executive. In the bracket, it's more clear. First, duty of auditor. You start with the duty of audit. Okay, I'll write it here. Link with 5 fundamental principles. That's sometimes more than one also could be there. In this case, it's just confidentiality. You're lucky, just one. Now, explain this point more. Make it more specific. Whether the auditor has any legal or any professional right to disclose client information to anyone else. Do they have that? If they have, write it. If they don't have, that also you write it. That is the next. After the five principles, fundamental, this thing, confidential. Next duty is what? Do they have legal responsibility? Sorry, legal right or duty? Do they have professional right or duty? You have to write it. So in this case, they have no legal right or no professional right or duty to disclose client information to anyone else. Just because something is available to the auditor. See, auditor has information to everything, okay? Whose remuneration is what? You have to give it in the report. Executive director's remuneration is this. It is compulsory. But just because auditor has does not mean someone else will come and ask the auditor, give me his remuneration. You cannot do that. They do not have any legal, they do not have any professional right or duty to disclose this. Because this is about disclosing client information, your answer also have to be specifically about disclosing client information, whether they have the right or not. That's what you need to talk about. That's how you need to start with. The question itself says about disclosure of remuneration package. Disclose information. First, tell about general information. We'll come to remuneration later on. That's how you start. You first start in a general way. Whether you have a right to disclose information to someone else or not. You means I'm talking from the point of auditor. Auditor has this thing or not. Next, second paragraph. First paragraph is duty of auditor. Second paragraph, okay, this is first. Number 2. What is second paragraph? Are they breaching that duty or not if they disclose? Or they are not breaching if they disclose? That is the second thing. Are they going to breach of fundamental principle? Okay, I will write FP, fundamental principle. Which fundamental principle did you talk in paragraph 1? Same principle you have to talk in 2 only. You cannot change. So it's confidentiality. Bring it here and talk. Are you going to breach confidentiality if you disclose? That is your second paragraph. This is about disclosure. Everything will be about disclosure. Okay. So if they disclose, okay, it would be a breach. It would be a breach of the duty of confidentiality. To whom? To Black 7. Mention the name of the company. Now you are linking it more, you are making it more specific by linking it to the case study. This is the place often where candidates go wrong. They write general answers. This is confidential issue. Confidentiality means this. Do not explain what does confidentiality means. Already in part A you have done. If part A was not there, still don't explain. You only have 10 marks. Out of this 10 marks, you have 3 requests. For 3 requests, let's say 2 or 3 marks you'll be getting per request. You do not have the time to sit and define what is confidentiality. You're not going to get any extra marks. You are going to throw away the marks. Okay. Just writing auditor owes a duty of confidentiality to the client is enough. You don't have to explain what is confidentiality means. Not at this stage. There are places where you have to define certain things, but if it's just one requirement for like 20-30 marks, you can sit and nicely define. Here you cannot, maybe 2-3 marks for the first request. You cannot sit and define. Okay. So mention the name of the company. From second paragraph onwards, most of the answers, if you see, they have started talking about the company. Means you are using the case study. So if you as an auditor act as an auditor or an advisor, you are breaching that duty of confidentiality. This is important to know. One, you are breaching to whom and whom. Understand, you are breaching the duty of confidentiality to Black 7 if you are acting as an auditor. Black 7 is the company, and to the Brad also if you are acting as an advisor, to disclose that information. Remember, you can disclose confidential information in two conditions. If these two conditions are not there, you cannot disclose. What is it? One, it is required by law. The other one, it is in the public interest. In this case, it is neither required by law, neither in the public interest. You cannot disclose. Simply, if you disclose, it's a breach. So explain like this. You need to talk breach. Okay, law, public interest. This terms needs to be there in your answer. If you have went through my lecture confidential just few slides back, under what conditions you can give confidential information, you know that. If law requires you, if public interest is there, if this two is not there, you cannot disclose. If you disclose, still if you disclose, it's a breach. I'm taking more time in each paragraph to explain you these things so that later on you know what needs to be done. Okay, this is you are at an initial stage of AAA questions. I do not want to jump from one question to another. Okay, if I take care of the time, want to finish it in a short period of time, I can do that, but nothing will go in your head. You are the one who is going to answer this later on, and I don't want you to struggle. Okay, take time and understand and process each things. Third paragraph is okay. Third paragraph is what? Okay, you told they are breach. Now come to the possibilities of when you can disclose, when you cannot disclose. When you can disclose, possibility of disclosing. Okay, third paragraph, possibility of disclosing. So audit firm can only disclose this information to Rosella, name the company. And when you have to talk from the point of the auditor, mention audit firm, right? Audit firm, and the name of the person or the company, whoever it is. So audit firm, they can disclose this information to Rosella, but with Brad's consent. It's very important. You have to mention the name of that person, whose consent you have to take. You can disclose, but Brad's consent is required. But in this case, okay, it's not over, guys. You have to see that he himself only is not willing to disclose. He refused. Brad is the one who refused. So if in this case, it is highly unlikely that Brad is going to give you consent, because he himself already refused very clearly to Rosella is not going to disclose such information. So directly he cannot get. Now coming to the fourth paragraph. Okay, if directly Rosella cannot get the information, go through the indirect ways. How Rosella can get the information? Because we are talking about possibility of disclosing. Okay, through Brad's consent is not getting, but indirectly there are other ways. Check for other ways of getting that information, other ways of remuneration. There might be other ways of getting that remuneration. What is it? Think. Where is remuneration disclosed? Exactly. Audited financial statements. Latest audited financial statements. This is the place where you are going to get the remuneration. So, can Rosella get this latest audited financial statement? That is also a question you need to ask. Can she get it? Will it be available to her? It will be available to her. Why? Because she is in her capacity as a shareholder. In her capacity as a shareholder, the information will be available to Rosella, which discloses Brad's remuneration, but for the previous year. Correct? For the previous years, he will get it. Yes. Why, Brad? Because he's in the executive, right? Or he might be the chairman. So as a chair or the highest paid executive, for all the executive directors, especially the chair and their remuneration is always disclosed separately. It is there. It will be there. Okay, so Rosella can wait for this information so that this information becomes publicly available. She can wait for it. Like this also she can get. Next, the fifth paragraph. What is fifth paragraph? It looks a bit long. How do you go through there? But trust me, I mean, if you think practically, you can come to the steps more easily. If you think from the point of textbook, it will make a little bit difficult for you to think about all this because in the textbook you don't go through all the stages. You just learn the knowledge where okay, information is to be disclosed. This is how auditors need to check. This is the audit evidence. This is the auditor's report. That's only you learn in audit. The answering technique is not explained in Ripoli. This is something extra that you need to learn on your own. Answering answering questions. This is different. The way you have studied in textbook is different. Two things combined together, how well you combine each other and create a perfect balance is the key to pass. Okay, I know it's a little bit difficult. It will take time, but trust me, after a point of time, you will see how your answers are improving. Okay, because this is what the second question. So this is it looks a little bit difficult for you to digest, but it's okay. It happens to everyone. Do not panic. As long as you're going with this flow, you are in the right track. Okay. Next place. What is the next place? Look for more possibilities. Think registered office. Black Seven's registered office. He can get it from there because Rosella was a shareholder before. So he will be entitled to get any document from there. Then sixth. What is the sixth? Audit firm's working paper. Just a minute because the prayers are going on, the azan. So we'll wait for 2 minutes silence. Okay, so the next place is the audit firm's working paper. Okay, sometimes you need to think a lot actually in AAA to come up with these answers. Okay, you need to be a little bit more practical because in textbook it is not given, everything is not given in one place. That this is how you find the information, you go here, you have to think. Okay, whatever the points, maximum points that you can think of, right? If you cannot come up with all the points, it's okay. At least for the points that you have written, you are going to get marks. Okay, and that's enough because the pass rate is only 50%. You are not here to score 100 out of 100%. That means you still can afford to make 50% mistake and pass along with this paper. Hello, that does not mean that I'm encouraging you just to stop at 50. No, you can aim for higher, definitely. Why not? If you get 60, 70, 80, if you get world ranks, it's always appreciated. But the thing is, your main focus is you have to pass over that 50. After that 60, 70, whatever you get is, just that's another thing. So don't try to perfect answers, don't try to write everything. whatever you can think of. Some things are very easy, like getting from the shop financial statements, or maybe asking the person. These things are pretty easy. These things you can write. Whatever the easy things, write first. Whatever the things you can come up with, write it first. Okay. So the sixth is audit working paper. You can request for them, but if you request for them, they should be refused. They should be refused. You cannot give your audit working papers. Auditors cannot give their audit working paper to Rosella if someone demands. No, should be refused. And the last but not the least, what is it? Conclusion. What is the conclusion? Always your last para will be 3 or 4, 2 lines only. They are very small. Conclusion. Whether you have to comply, you have to give the information, or you don't have to give the information. So the request to disclose the brass remuneration must be declined. We know this from the very beginning, but you have to write, you have to come to this stage to write it, not in the beginning. Write it very clearly. Don't just write it as to what has to be declined. Request to disclose Brad's information. Whose remuneration? Sorry, not information, remuneration. Okay, Brad's remuneration must be declined. See, some of you might say must be accepted also. Okay, but mind you, if you write it, you have to give evidence why they have to accept. And most of the time, okay, I will not tell you most of the time. In fact, 99.99%, it is always the safest side to go with the answers that has been given to you, rather than you coming in the opposite this thing. Because I'm sure the examiner must have gone through all those things and they know that this is the answer. This is the most suitable answer, because under this you can write more points. If you have to write it has to be accepted, you have to disclose. Trust me, writing points on it will be more tough on you, because I know this thing that some of you want to challenge the answer and think of your own answer. Definitely you will get marks for that also, but you have to come up with the evidences, and it's more difficult because you don't know whether you're right or wrong, because answer is not given anywhere. Okay, especially in some cases where strongly you know that this is the right answer, you have to go with that answer. Some things are very straightforward, very strongly you know it's towards one point. There are some scenarios where it's like 50-50. You can do this also, you can do that also. There, okay, there I can tell you, okay, you can go opposite to the answer that is given to you, because you have points for this also, you have points for that. You should always have points for both the sides if you want to write any of it. Otherwise, if you don't have any points, go with what is given to you. It has to be declined and points as given above. However, okay, if you can add this, if you think of more else, if you, okay, writing this much is enough, but if you want to write more, elaborate more, if you have the time, you can write the next line also. However, Rosella may be directed to alternative sources of information, which may be of use. Yes, maybe directly she cannot get Brad's remuneration, but alternative sources of information can be given to her. Okay. Next request is continuing as a personal advisor. Your job is to see whether he can continue as a personal advisor or not, whether it will be ethical or not, whether it falls in the duties of the audit firm or not. Same way for the first request, how you have come up with this, here also you have to talk about it. But you have to know, what is it? When you're continuing as a personal advisor, what does it imply? Here you cannot say it is in conflict. I mean, it is breaching any of the fundamental principle. Here it is not about fundamental principle. Here it is something else. What is it? You continuing as a personal advisor, that means you are an advisor for this and that. You are working for 2 clients and you know they are competitors. What does it mean? Just few minutes before in my lecture we went through that. It is known as conflicts of interest. Conflict of interest. You have to identify from the request what it implies. This is a conflict of interest where you are working for the 2 firms and both are competitors. So this will give rise to conflict between the interest of Black 7 and Rosella. Okay, understand that. First is identifying. Continuing as a personal advisor gives rise to what? Conflict of interest. It's a conflict of interest. First paragraph. Second paragraph. Okay, let me see how many paragraphs are there. 1, 2, 3, 4. Okay, this is also quite lengthy. Now you have to give from your understanding of conflict of interest, what do you know? Places where they can add for both parties, places where they cannot add. Whenever we say can or cannot, always start with the positive things, always. That's how you answer. That means places where they can work for two parties. Then you go with the places where they cannot work for the two parties and see in which out of this two the scenario fits, whether they can or they cannot. So you start with, but most of the time it is good to not add, okay, for the safer side. You cannot add for the two parties. So it would be inappropriate for one advisor to add for both parties in certain matters. Okay, so here they didn't write. Okay, here I think they wrote the other way around. Wait. Okay, here they wrote the other way around. Usually I always say write the advantages first, but maybe the reason is maybe the first one is more appropriate for Rosella. Maybe that's the reason examiner has written this, but it's okay. If you write the other way around also, there is no harm in it. Places where they can add as a personal advisor. Okay, I always go by that order. First, places where they can and places where they cannot. But it's okay. They have written the other way wrong. Other way, it's fine. It will not have an impact on your answer. Answer will remain the same, but we'll get the points. The main point is, if these things are there, you cannot add as an advisor for two parties. What is it? Negotiating a share price. If you do not have any safeguard, you cannot negotiate a share price. It's inappropriate. First write it, because this is the main theme. Before you explain it, under what conditions you cannot add as an advisor for two parties, first explain and then you explain. What are you doing here? Valuing Rosella's shareholding and negotiating her profit related remuneration. From the case study, right? You are negotiating and you're valuing. What does it imply? Now tell. This is a threat to what? It gives rise to what threat? Think. It's not confidentiality. It is not professional compliance behavior, not professional behavior. Integrity and objectivity is left. Not integrity also. Objectivity. Threaten the objectivity of the audit. Audit of what? Black 7. How? Because you will be influenced by Rosella. Whenever the word comes influenced by someone, they pressurize you something, they influence you to do certain things, immediately understand it is the objectivity. That is the principle which is being threatened. And most of the time in your answer, you will see this. Objectivity, objectivity, objectivity. This is one of the most common, I think, principle which is being threatened. I don't know why. What's the reason? Maybe examiner likes it, but yeah, that's this thing. Okay. Anyway, jokes apart. Understand how. If you are telling objectivity, explain how objectivity. What Rosella will do. As I told you, always explain the thread. Explain the thread here. Rosella may try to exert influence to overstate profit. Isn't it? Because she's having a shareholding, her profit, her remuneration is based on profit. Definitely she wants higher profit. So she will try to exert influence to overstate that profit. Makes sense, right? Over whom? Over Janus. Janus is her brother. If you know the relationship, it's given there. Go back and check relation. Relation matters a lot in your answer. Because he's his brother and also a finance director, as well as the auditor. Okay. So that's it. Now, what is the next? Next is where he can. Okay, it is possible to advise on personal tax matters. Personal tax matters, you can advise. If you have gone through that, I think it was self-review thread. Under that, you are giving tax advisors, tax computation, tax return, all those things. There you will get this point. That there are reasons where you can give personal tax matters. Okay, but appropriate safeguard has to be there if you do so. What is it? What are the safeguards? When you mention the safeguard, mention the safeguard. These are the two safeguards. One, make an agreement of Black 7 and the remaining directors. The other one, advise one or all the clients to seek additional independent advice. Tell them it's not only from you, they have to go out and seek additional independent advice. You can tell only one or both your clients and make an agreement with the Black 7. This are your safeguard. Do not go through your textbook, what you have studied. So many safeguards are there. You cannot list all those safeguards here. It's not appropriate. Look at the case study. It is talking about the Black 7 and Black Heaven. They are competing with each other. And you are supposed to be a personal advisor and an auditor for both the company. So it's very simple. Make an agreement with one client or tell one or both the client to go and seek additional advice. That's it. That's the safeguard. It looks very easy, but I don't know why when it comes to writing, you think a lot and write so much of safeguard which is not required and which is not worth your time as well as marks. But in this case, okay, in this case, see for the evidences whether which one will be agreeable, which will not be. Okay, it seems unlikely that Black 7 would agree to such an arrangement. Will he? I mean, this agreement. Will he come to this agreement? No. Why? Looking at the relationship between the Rosella and her former associate, does not look like, no? They're competing with each other. They're against each other. Now, the third is appointment as an auditor. Third request. Generally, you do not need so much of answers. The answer is usually lengthier than your actual answer because for 10 marks, you do not have to write so much. The reason why these answers are lengthy is it is for your learning purpose. That means they have given all the possible things that a candidate could write in this answer. That's why you will see it is this answer that is written is worth more than 10 marks. It is not for a 10 marks question. It is worth for 20 marks question if you say, or 15 marks. So do not look at the size of an answer and panic. No. Main thing is ask yourself, am I writing the important things? Do I know how to start? Do I know the middle part and how to finish? If yes, okay, go ahead. Even if your answer is smaller than actual answer, it will be smaller than the actual answer. Trust me, time yourself and write this whole answer. You cannot finish it for 10 marks. You will need more. Okay, anyway, coming back to it, appointment as an auditor. Immediately, this is also a conflict of interest. Same like the previous one, personal advisor and an auditor. Between whom? Black Heaven and Black 7. Because they are competitors to each other. Number one is always identification of what it is. Appointment as an auditor gives rise to what? Conflict of interest. Number two, again, same thing. Explain. Explain what? Whether they can be an auditor first. Explain, and where they cannot be an auditor. So it is nothing improper in having both companies audited by the same. If there are safeguards, you need to start your answer like this, okay? If there are appropriate safeguards, there is no harm in auditing. For example, you are having different report. Give examples, okay? Wherever you are lacking, you cannot explain. Give examples. More of example will score more marks for you. It means it shows the examiner you know more about it. Like you can use different reporting partners for both. Teams of staff could be different. Okay, now the third. But sometimes what happens is even with the safeguard, the directors of Black 7, okay, perceive that the involvement of the company's auditor with a competitor will materially prejudice their interest. That means it makes the Black 7 see the auditor as someone who is not taking care of their interest. They're taking care of their competitor's interest. You understanding? For example, you have a friend. Okay, this is a very out of the topic. Okay, example just to make you understand this better. You have a friend, okay, who is talking to you and your enemy. Okay, and you can see that your friend is almost very much every day you see your friend with your enemy. I mean, they're talking this thing. What impact does it have on you for your friend? You will always think that this friend is more towards the your enemy, or maybe they are now best friends. He's taking more care of them than you. Same way for the auditor. You feel auditor is taking the interest of their competitor more than you. It will make you perceive like that at least. Even if in reality we don't know what's the picture, but it will make you perceive like that. You will have an idea like that. Even safeguard is there. That still, it's human nature, right? Human tendency. We know that. So because of that, what should be done? Also, if you see the name, you see some things needs a little bit of more creative mind to see those things. Look at the name. If you see one is Black 7, one is Black Heaven. Isn't the name very similar? It makes it gives a picture that Rosella could be quite aggressive, right? 4. What is 4? You are basically giving them the safeguard. What should be done? Okay. So what could be done? If you see the relationship between Rosella and Black 7, it's not so good, right? So for the for the purpose of prudent, you become more prudent, more cautious, more careful. Okay. You can include in their respective engagement letter a clause. A clause could be added there. What is that? What that clause would do? There, you are going to say that you are going to reserve the right to add for the other client, subject to confidential information to be kept. So that means you can add for the other client, but you are giving them a promise that you are going to keep their confidential information secure. You're writing it in an engagement letter as a clause and you are giving it. That could be done. Fifth safeguard is, what is it? Maybe it's not a safeguard, I would say. It's like more thread. If you give services, other services, it is threatened to objectivity of audit assignment. It is a threatened to the objectivity of the audit assignment. Okay, and if you see, for a personal advisor, it is very inappropriate to report to be the reporting partner or otherwise involved in the audit. How can a personal advisor be involved in the audit? Looks very inappropriate, right? And the last one, what is it? Conclusion. It's up to you how big or small you want the conclusion to be. So the audit appointment, okay, it can be accepted. First of all, it can be accepted with some safeguard. You can use different reporting partner or audit staff. Okay, the audit partner, the audit staff that is there in the Black 7, do not use it in the Black Heaven. Or even for the provision of other services, do not keep the same stuff. But remember, even with the safeguard, if Rosella's appointments are accepted, what is Rosella's appointment? That means to add as an auditor. You accept it, even with the safeguard. Make sure Black 7 may not decide to reappoint you in the future later on. That is the consequences. Okay, you can give consequences of your action also, that if you decide to go ahead with the appointment, this can happen. Like that also you can give in your conclusion. So that's it for test understanding 3. Now let us summarize everything what we have discussed in this lecture. So we have talked about conceptual framework. That conceptual framework is a principle based model which is also similar to your ACCA's Code of Ethics and Conduct. Remember the 5 fundamental principles of ACCA, that is professional behavior, professional competence and due care, confidentiality, integrity, and objectivity. When any ethical question comes, you should know which one of it is in thread. So we talked about those 5 fundamental principles, then we went through threads, the 5 threads with their safeguards for each of them. Self-interest, self-review, advocacy, familiarity, and intimidation. Self-interest means where you have financial or non-financial interest in your client. Self-review, where you are marking your own work. Advocacy, you are promoting your client. Familiarity, you have been in close association with your client for a long time, that you become very familiar with them. And intimidation means where you are being pressurized or some kind of influence by your client to act in a certain way which is not ethical. And then the safeguard. Don't forget this, the 5 fundamental principles, the 5 threads, and the safeguard for your ethical question. And remember, one question on ethics, no doubt you're going to get it. Okay, I know it's a quite a long lecture, and if you have come to this stage, hats, one clap for yourself, you deserve it. I mean, for, you know, you could have watched other things, you could have been on Netflix, you could have watched songs, music, but you have choose to stay here, watch my video till end, means this is of value to you. You value this. So don't let it go waste. Okay, my advice is please practice the questions on your own. Do test your understanding to on your own and check how well you are going ahead. And meanwhile, don't forget to watch my other lectures, previous lecture. If you have missed it out, it's there on the playlist. The AAA from September 2022 to June 2023 lecture. That's the name of the playlist. There is only one playlist for AAA. So it's very easy. You can quickly find out. I have already recorded the previous 3 lecture. This is the 4th lecture, and this is the oldie lecture where 2 questions I've done. Before this, the previous 3 questions I've just discussed the concept. No questions was done. So thank you for watching, and do keep watching my other videos and keep supporting me. Don't forget to subscribe to my channel if you're watching this for the first time, and please, I humbly request you to send this link to all your social media, to all your friends, because I know for a fact I've been getting requests, and even though there are people I don't know, but people actually struggle for this paper AAA. That's the reason I've come up with this paper lately for the December session. Please make a use of it. Make others also benefit from it. If you're watching it, let others know that there's a channel like this which is giving free lectures, and especially for AAA. Okay, because no one is giving lecture. If you go on YouTube, no one is giving such lecture, such long lecture, and it is relevant. No matter whatever I do, I cannot make this lecture short and short. You are going to miss out the important things. This needs to be explained in this way. I hope that this will be beneficial to you, and also the ones who are going to watch it. Do share it with your friends, and let me know in the comment below if you have certain doubts or certain videos on AAA if you want me to make. See you in the next video, and thank you for watching.